Good morning, everybody. Welcome back to another episode of The Market Open. We are live. It is Thursday, July 30th. It is the day after Microsoft, the day after Meta, the day after the FOMC, and we have a lot to discuss and get into. Thank you, everybody, for being with me here today. As you can see in the pre-markets, we're somewhat green. It's been a rough 4 days. Today's Thursday, right? Well, a rough 3 days, Monday through Wednesday. And I think a little bit of this green that we're seeing right here in the pre-market is based on a variety of issues. The first issue is that I think we're due for somewhat of a little bit of a relief rally, and hopefully we end up getting it. I also think there's some meaningful, warranted explanations for why we could get a relief rally, and we'll talk about that today. On top of that, you've got some geopolitical stuff that is not necessarily getting better, but it's not necessarily as bad as it was yesterday. I mean, there's some nuances here that we can talk about that the market might be okay with. We have PCE data for inflation that actually came in a bit better than expected. So we'll talk about that in terms of how the market is ultimately thinking of it. And then you've got earnings. And I think that's obviously where the big story is today. You got Microsoft, Meta, you had a bunch of other companies, Starbucks, Qualcomm. We'll talk about those, Chipotle. But Microsoft and Meta were very important. One of those stocks is up 10% right now in the pre-market. Microsoft, one of those stocks, is down 10% in the pre-market. Meta, I think there is a very explicit reason for why one is up and one is down, and we will discuss that. The nuances of why one is up versus why one is down is also part of the reason why I think we are getting this pseudo relief rally that you're seeing right here in the pre-market. Obviously, Micron being up 6% right here after Micron almost was $5 away from going below 600 or 700 yesterday, means that there's a little bit of a meaningful bounce happening. Now, again, we've got about 40 minutes into the market open, so maybe this is a pre-market bounce up and gets faded as soon as the market opens again, which is something we've seen over the past couple of weeks many times. But I think there might be some more truth for why today could end up going green, and hopefully we're due for a green day after 3 days of relatively ugly red. But obviously it's hard to trust some of this stuff happening right now. And of course, if Microsoft or Micron's up 6%, the stock that's going to be down 3%. Good old ServiceNow. You got your software names down in the pre-market. Why are they down? Because the semis are up. It's a story we've been through every single day this year. But Adobe down 3%. Why? After being up 6% yesterday? Well, Micron, SanDisk are up in the pre-market right now. So once again, that yin and yang between software, SanDisk, right there up 8%, and semis continues to happen. But given the carnage in semis, I think it's time to have a little bit of relief. I don't know if this is a full-on sentiment change or if something structural is happening to get the market to put in that bottom that we are all looking for, which I also think is a big theme of today's show that we're going to be discussing. And I'll get more into it after we get through some of the earnings. But are we in a March 30th bottom where we start to V-shape type of situation? Or are we in a 2022 stair-step down, gradual decline situation? I think there's two scenarios, and I honestly think it's one or the other. I mean, obviously it could be a third scenario, but I really do think it's either, okay, the carnage is in, and I'll talk about why I think it could be very similar to March 30th if you look at some of the corresponding variables and external variables that kind of make it feel like it could be that situation where we don't have to V-shape all the way back to all-time highs, but we definitely don't need to, see Micron going to 650. Maybe 705 was indeed that bottom. Or are these bounces going to get rejected at resistance? You're going to think that everything's okay, and then boom, you just have another month, another week of further declines. I think those are two scenarios, and those two scenarios definitely have to be talked about in order to kind of figure out where the trajectory of this market could go. So got a lot to talk about, a lot to get into. Thank you, everybody, for being here. Chad, thank you for the compliment on the sweatshirt. I appreciate it. Has a nice little logo on this sweatshirt that is a logo that I care about. So there you go. I've worn this sweatshirt so many times. I wore that Ontology hoodie with the Carp interview, and I've literally worn that hoodie. I think it's like I got it in February. I think I've worn it like 100, 200 times. Like Iliano's gear is so good and it fits so well. So I feel like a majority of my shit is just Palantir. Majority of my wardrobe is just Palantir gear now. So I wore the Robin Hood. I wish they had the camera on me yesterday in the Robin Hood call. They didn't have the cameras on the audience, but I wore the Robin Hood hoodie. And if you guys heard my question, I was like, congrats, Vlad, and having a great quarter. And he was like, congrats on a great hoodie. And dude, if you guys saw my face, I was blushing so hard and I didn't know what to say because You guys saw what Karp said in the beginning of our interview. I don't know how to take compliments. And I was just like, yeah, thanks. It's nice. It's very nice. I just went into my question. I was like, thanks. It's very nice. Very nice. It's like, it was so like cringe. And if you saw my face, you would have seen me blushing my ass off. But yeah, I'm not the best. I wish they had the camera on. You would have seen. I was like looking down. I couldn't even look up at him. It was horrible. It was horrible. That's so gay. Yes. Grown men make me blush. What do you want me to say? What do you want me to say? All right, so let's get into the earnings. We got a lot to get into. Again, thank you everybody for being here. And let's start off with the big tech earnings because we are going to get into those. I see Robinhood is on, or Vlad's on TV. I will save this clip because I have it live, and then we'll listen to this in a second. But let's get through some of these big tech earnings, and then we'll get into Robinhood as well. Robinhood is the earnings I actually don't want to talk about in the most urgent manner because there's nothing to talk about that's necessarily urgent. They crushed the quarter. Like legitimately, that was a fantastic. No, it's not, it's not in the zeitgeist of the investing community right now because everyone's so focused on Microsoft and Meta and the semi sell-off. But if that was 2025 and Robinhood put up those numbers, the stock would be up 20%. Like I genuinely believe the stock would be. It was one of the most efficient quarters they've had. They've reduced their expenses on the guidance, which is the thing they got dinged for last quarter. And it was one of the strongest growth quarters they had in every single part of the business. Like you look at every metric, it grew. And it didn't just grow 5 or 10%. It grew like 20 to 25%. Many of them growing 30 to 50%. So we'll talk about that more later. But, obviously I think Hood is well warranted to be above $100 right now. And hopefully we get some of that action when the market opens. But let's get into Microsoft and Meta. All right, so let's start off with Meta. This one's a little ugly, down 9.68%. So why is Microsoft up 10%? Why is Meta down 9%? I think it is one thing. There's a bunch of different things that'll be analyzed today, but I think it's one thing that's very simple. As soon as Microsoft started pumping, because Microsoft did not start pumping yesterday on the earnings. I mean, it was up like 1 or 2%, nothing serious. The reason they went up 10% is because on the call, Amy Hood, the CFO, she said something very simple. She said, hey, we're not going to increase CapEx in 2026. We're going to leave it unchanged at $190 billion. And as a result of that, the market got excited. I mean, it really was that simple. They didn't increase CapEx and they said we're going to remain free cash flow positive. Microsoft did 35 billion of CapEx, 20 billion of free cash flow. Google went negative free cash flow. And so when you look at the divergence between, Google's performance on the earnings and Microsoft's performance, yes, Google grew more in certain sectors. Obviously, Google's cloud business is not as mature as Microsoft's. But they said the two things that the market cared about were not increasing CapEx dramatically. Now, they didn't give 2027 guidance, which is kind of, the thing that no one's talking about. Like if they end up saying they're doing 190 for 2026, 190 billion. Let's say they do 400 or 280 or 360 for 2027. Like that's a meaningful increase in CapEx. And I would imagine the street would care about that. But because the guide is saying we're going to continue to remain free cash flow positive, I think the underlying metrics within how the street's analyzing it is, they're going to increase CapEx. We should be ready for that, but it's not going to be to the detriment of the core business. And that is why I think this stock went up versus why Meta went down. Zuckerberg did increase CapEx. He didn't increase it on the top end of the range, but he increased it on the bottom end of the range. It went from 125 to 135. The top end is 145. So technically he didn't increase the overall amount of spend on CapEx, but because he increased the bottom end of it, and given the nature of some of the stuff he talked about in the call, which was very like, hey, this is the opportunity of a lifetime. We have to go for this. I'd rather overinvest than underinvest. I think that sentiment, along with the lack of growth from the increase of CapEx, which there was growth, but there were some parts of the growth story that were slowing down Q over Q. That's what got the street upset. In terms of Microsoft, 90 billion of revenue. They beat by 3 billion. EPS 474. That was a beat by about 10%. Azure, 43% year over year. They did 100 billion in Azure revenue, cloud revenue, 59 billion, intelligent cloud, 39 billion, operating income, 40 billion, and then CapEx was 35 billion. I think the real big thing right here on Microsoft, and this was the other reason outside of just the lack of increase in CapEx right here, and this is from Bernstein. They have a price target of $647 right now. Is Microsoft delivered this quarter with Azure growth beating consensus, 43 versus 41. Remember 2 quarters ago, they missed on Azure, which was part of the reason they fell 10%. The guide for further Azure acceleration, 45% versus 41%. Again, that 4% delta is a pretty big beat on the base that Microsoft's growing at. And then Copilot, their software business that the street is worried about, that software is dead and that no one's using Copilot, grew 50% Q over Q. I mean, 30 million now paid subscribers on Copilot as that is continuing to grow in a pretty significant way. With again, stable CapEx growth because the CapEx didn't increase as dramatically. So you've got the core things that Microsoft needed to do in terms of the guide, in terms of Azure, in terms of keeping CapEx stable, and in terms of proving that their software business is not dead. Nadella tweeted last night that their return on invested capital is about 29.7%. And then on the call, I think the CFO just exercised some pretty sophisticated financial discipline to the public markets. And as a result of that, that's why I think Microsoft got the bid that they got. Meta, on the other hand, did not necessarily do that. Meta said, we're going to keep spending on CapEx. Meta said, we're going to work on prediction markets and all these different things that they mentioned in the call. And I think the street just looked at it and was like, where is the real significant ROI that's sustainable outside of advertising that we can look at? Now, advertising business was still good. It was up 27% year over year. The problem is last quarter, it was up 33% year over year. Now, that's me nitpicking that Q over Q decline in terms of the rate of growth, because obviously you're supposed to look at a year over year, not Q over Q. But the point is, if you're going to continue to spend more on CapEx, and if you're going to continue to freaking lose $5 billion every 90 days on Reality Labs, when you're spending $145 billion on CapEx and the revenue growth isn't necessarily accelerating dramatically, like they beat on revenue by like $100 million, which, Microsoft beat by $3 billion. So obviously there's a big difference right there in terms of the magnitudes of the beat. I could understand how the street could be upset. Daily active people up 3% year over year. Q3 revenue guidance 61 to 64 billion. Again, that was just not that big of a beat. And then the CapEx increased as well. They did miss on EPS also because of a tax one-time charge, very similar that they had in 2025. I think that could have been part of the reason why the algos got upset, because they had that immediate EPS beat. But that's rather irrelevant. I mean, I think the street is also, we got to give the street a little bit more credit. They understand that taxes are a natural part of every business dynamic. If the street was so impressed by Google beating EPS by 300% because of their unrealized gain on SpaceX, Google stock would be up 15% after hours because they have this massive EPS beat. So I don't think Meta's down 10% because of a tax charge that the street is like, oh my goodness, they missed because they have to pay their taxes. We have to take it down 10%. I think the street's actually looking at the growth, the CapEx, and then saying, is there a story here that's really exciting, or is a story here that's changing? And if it's not changing and it's not that exciting, do we think our dollars are better allocated to a different hyperscaler? Having said that, I think Meta is cheap. I thought Meta was cheap at 600. I thought Meta was cheap at 650. I think Meta is obviously cheap at 527. But at this point, I also understand the street's issue with Zucks. By the way, Oracle just signed a deal with Google. Oracle stock right there up 3.5%. Oracle expands their partnership with Google. Oracle will launch enterprise applications built on Google's Gemini model. And as a result of that, you got Oracle right there up 3.4%. Some much needed good news and catalyst for a stock that's obviously taking a pretty big beating. And it's adding to the semi-rebound that we're seeing right here. So I understand why Meta's down 10%. I'm not even as a shareholder, I'm like, you know what? I get it. Zucks did not impress on the call. I didn't think the call was horrible. I didn't think the earnings were horrible. Obviously, I didn't think the numbers were that bad. But I get it. I understand what Microsoft did when it came to cost rationalization, when it comes to CapEx. I understand that Meta necessarily didn't do that. And the rise of AI spending with limited visibility on future CapEx, a lack of real clear AI monetization, which is what Evercore came out today and said, which is why they took them off their top pick list. And they cut the price target from 930 to 820. Meta got all price target reductions today. Microsoft all got price target upgrades today. Most of the Meta price targets are down about 8 to 10%. Most of the Microsoft price targets are from the 450s into the 600s or 580s. So it's very similar to what happened last quarter with Meta. Microsoft, it's a different sort of view because, Microsoft's accelerated some of their core software business, which is why Microsoft's getting the upgrade right here. But Evercore said, we don't see visibility on future CapEx. We think there's a lack of clear AI monetization, and we think there's rising AI spend, but we don't necessarily know where the AI spend is going to. And as a result of that, you got Meta down 9%. Now, having said that, are they really going to take Meta below 500? I don't know. But the fact that everything is rallying right here in the pre-market in regards to this AI trade, and Meta can not even kind of catch a bid, goes to show that the street is just not happy with the story that Zucks is painting for them. And as a result of that, I think we're getting some pain right there. Chat says there's financial engineering for Copilot usage. I do not doubt that Nadella found some way to figure out how to show the street that Copilot is expanding based on bundling deals or doing whatever he had to do. But the reality is they showed acceleration, and that's it. I mean, anecdotally, every time I talk to someone that uses Copilot, they're like, dude, I don't use Copilot. My company just pays for it because they feel like they need to pay for it. Or I use a different type of model to be able to do some different enterprise tasks, which is why I was surprised. And also, quite frankly, I think the 10% right here is also because the street was surprised, because what was the narrative for the past 6 months, especially after Q1? No one uses Copilot. Copilot is dead. No one cares about Copilot. Microsoft's core software offering where they sell seats into the enterprise is starting to decline, especially in a world in which Anthropic and OpenAI are creating all their different mechanisms to be able to enter into the enterprise and obviously compete with Microsoft. And this quarter, the numbers themselves changed it. Yeah, so many of you in the chat are saying Copilot is dumb. I mean, so many of you in the chat have said whenever we talked about Copilot that your company pays for it, but you don't use it. But if they're showing the growth, that's kind of all the street cares about, no matter how they get it. And that's why the stock right here is getting a 10% bid. The interesting thing here is that Meta and Microsoft both were hit so badly over the past 3 months that I thought any piece of good news would pump them both. Microsoft had like the slightest piece of good news, which is we're not increasing CapEx for 2026, which again, doesn't even account for what's happening in 2027. It's just we're not increasing it for 2026. Software growth is up. Boom. Microsoft pumps 10%. Meta didn't have any good news. I mean, there wasn't really the slightest bit of like, here's the vision for the next 5 years and how we're going to attack and how, we're showing it in the numbers that we're going to really capitalize on this moment. There was some of that, but there wasn't like kind of that big number that the street wanted. And that's why the street continues to be upset, taking this one down 10%. Amazon and Apple will be today. I'll be live for those. Obviously, those are going to be super important as well. But I think that at least gives you a high-level overview on kind of what's happening right there and why that one is continuing to take a hit. GDP growth for Q2 was a big miss. That is correct. But the street is seeming to not care too much about that. So the street wanted 2.1% in Q1. We came in at 1.5% instead for GDP growth, which when I saw that headline in the morning, I thought that was going to be, bad for the market because obviously we don't want growth to slow down. However, we also did get something else, which was PCE, and that PCE came in better than expectations. So PCE, which is the Fed's preferred measure of inflation, we'll talk about what Kevin Warsh did on the FOMC yesterday. Core price index 0.1%, street wanted 0.3. That was a beat. Personal spending 0.9 versus 0.3. And then GDP growth came in at 1.5 versus 2.1. PCE price index month over month, street thought it was going to be negative 0.1, came in at negative 0.1 at expectations, 3.7 versus 3.7 at expectations as well, 3.3 versus 3.3 year over year on core, and then 3.4 versus 3.5 on core prices Q over Q. So you had a couple of beats by the slightest amount, and then you had a bunch of things that came in line, aka showing inflation is not massively accelerating, at least from this preferred index, versus the expectations. And honestly, on a day like this, that's kind of what we needed. We really just needed a PC report that wasn't too bad. So it's not helping Meta right here, but it's definitely helping some of these other sectors that are at least getting a little bit of a bid right there. Rock Lab, that's up 5%. CoreWeave, that's up 10%. SK Hynix, and SK Hynix director actually bought 3,000 shares yesterday. Kospi was like down, I think 1%. So Kospi, it was still ugly, but it wasn't as ugly as it was in the beginning of the week. And you had some insider buys on SK Hynix, which, something I started looking at last night. Honestly, if we are due for a little bit of a short-term bounce, I kind of think DRAM is going to have some fun right here. I mean, like, I just logically, are we letting SanDisk go to $800? Are we letting Micron go to $600? If we're not, I think instead of having to pick between an individual one, you get the whole bucket of memory that has been obliterated in the month of July. And maybe DRAM is at least a short-term way to play it. Now, if we're actually March 30th bouncing, then I think a lot of names are going to bounce, and DRAM can do that as well. But that adds a lot more complications on if we think the sentiment around the AI trade is back to where it was in June. And I think it's going to take a while for it to necessarily be back. I think we need a real catalyst. But as long as it's not getting worse, I think that's what matters. But it's not just DRAM. It's the NeoClouds, the Nebuses, the CoreWeaves, the Bloom Energies. I mean, Bloom's up 10% right here after falling 15% on a massive earnings report. Like, a lot of these names are going to get back into the right side of the street's heart if the sentiment comes back. And the question is just going to be, can sentiment come back in a meaningful way? So having said that, Microsoft right there up 9%. You've got Meta down 9%. We do have AMD next week. That's going to be important. Netflix is down because software stocks are down, and Netflix is basically trading with the software stocks. Again, it's like, if you don't believe it at this point, I don't know what to tell you. Like, why is ServiceNow down 3% of the pre-market? Why was it up 7% yesterday? Like, I am convinced that, and I actually have a story to help convince other people if they're not convinced, which let's get into this because this was a pretty juicy story from last night. I am convinced that the software stocks are being shorted by hedge funds that are levered on semis because they need a hedge towards their semis. And when the semis go up, their shorts print. When the semis go down, the algos flip. And at this point, just seeing the rotation, like when I woke up and I saw ServiceNow down 4% and Micron up 5%, I was like, it's comical, but it's also what's been happening all year. And it seems like that's not slowing down anytime soon. So this was the big juicy story of last night. This was a rumor at 6 p.m. by Martin Shkreli. No one necessarily had to fully believe it, obviously, because we didn't know his sources. But then the Financial Times came out and they confirmed it. And they confirmed it with some more evidence, which also continues to make the argument around why some of these levered hedge funds have been shorting the software stocks as a hedge. So we've been talking about Leopold for the past couple of days, and a lot of people have been wondering, hey, this guy's loaded up on semis. Is he taking a hit? It seems like he is. Leopold has approached investors and lenders for a fresh capital after suffering sharp losses during the AI stock sell-off. The fund reportedly used leverage to amplify its concentrated AI bets, boosting gains during the rally, but worsening losses as technology stocks reversed. Despite the recent damage, situational awareness, the hedge fund was still up 439% net through the end of June, following extraordinary first half returns. It is unbelievable for a hedge fund to actually put up 439% returns in 6 months. Like, that doesn't happen. You're lucky if you're, as a hedge fund, you deliver 15 to 20% in the full year. So it goes to show you how unbelievably strong his positions were and the magnitude of the growth that they experienced. The fund overall is up almost like 2,000% since inception in 2024. This is something that the Financial Times saw in a letter he sent to his investors in July, on July 24th. At the end of the letter, he wrote, P.S. At times, we call out opportunities that seem like a particularly good time to add funds if you have been waiting for one. And just like even reading that, it felt so like nonchalant. He's like, yeah, we're down 40% this month. But by the way, a lot of you guys have been asking, when is the right time to put more money into my fund? And it feels like now's the best time to put money into the fund because things are obviously very attractive. He also mentioned in the letter that the opportunity that the sell-off has created towards the end of July is the most attractive opportunity to buy AI stocks since early 2025. So I think this is very interesting. Leopold, just like many other hedge funds, uses leverage. I mean, when you're managing that amount of capital, you're likely going to be using leverage, and you're also likely going to be hedging, right? You're going to be using a lot of different financial instruments. Obviously, if things go against you, and we know he had a lot of puts as well, so we have to see how much the carnage was, but a lot of reports are saying he was down 30 to 40% of the month, which after being up 400% for the year, like that's a really ugly decline. In his perspective, he's saying it's creating a very strong opportunity, and that opportunity can be maximized by you guys giving me more money so that I can buy the dip. Either he's right, and legitimately this is a buy the dip scenario, and we are going to see a massive V-shaped recovery, which I think there's some logic behind that, which we'll talk about in a second. Or this guy's Cathie Wood in 2021, where she was telling investors to just hold on because Zoom and Roku and Teladoc are going to be the disruptive, innovative winners, and you should keep investing in ARK because we're going to buy the dip on those because we're right, the street is wrong, and ultimately it's going to work out. Obviously, we saw what happened. That didn't work out. Those companies didn't end up doing what they need to do. Now, the difference between Zoom, Teladoc, and Roku versus Bloom Energy, SanDisk, Intel, Micron is one is going through an industrial revolution in the context of the most important technology that we've ever seen in the history of humanity that's putting up the earnings growth to justify the level of momentum that they've had. The other three were stocks that rallied when we had a pandemic and we shut down the economy for a year. So there are like qualitative and substantive differences between the nature of these rallies and the nature of these bull markets. But at the end of the day, if he's wrong and if the sentiment of the street is correct that these stocks meaningfully deserve to come down, and SanDisk is not going to 2,300 anytime soon again, then those massive 400% 6-month gains that he had when SanDisk was at 2,300, when Intel was at 140, when Micron was at 1,250, those aren't coming back anytime soon. They might come back, but they're not coming back anytime soon. So as an investor, the question is, do you want to allocate capital to buy the dip on those and just, say, all right, this is the opportunity to buy, or do we need another leg down? Do we need another 10, 15% down, potentially on the S&P, which would be another 30 to 40% down on a lot of those high beta names before the selling is fundamentally over? And I don't know the answer to that question, But I think that is something that a lot of people are going to be asking. Now, the broader implication from that Leopold article, which kind of confirms a lot of what we've been talking about over the past few days, at least it's something that I brought up on Tuesday that I thought was really interesting. By the way, his gross funds were $250 million in 2024 based on his 13 Fs. By the end of 2026 Q2, it was around 10 billion. And I think some reports had it at 20 billion. So obviously the kid grew, he was 24 years old, right? In 2 years from 250 million to almost 20 billion is crazy. But you don't do that without having leverage, and you don't do that without taking a ton of risk. And he used both of those. The risk is turning the opposite way now. And obviously he didn't sell the top, because otherwise he wouldn't be asking investors for fresh new capital, because he would just use that capital to buy the dip. And so, that's why he's raising new money to see if he can capitalize on this opportunity. The real big takeaway from this is that, on Tuesday, we mentioned, what if there's a fund out there that's blowing up? What if there, now Leopold has the most exposure, but there's plenty of other funds. I think I showed you guys one, Value Research Advisors. They had 30 positions. Literally all of them were semiconductor stocks. And the smallest position they had was worth $100 million. Majority of their positions were worth anywhere from 400 million to 800 million. They had 3 positions worth a few billion. So they were managing around $8 to $9 billion as well. Leopold at around 20 billion. They were probably on leverage as well. What if there were, and then there's probably a bunch of smaller funds that are probably managing like, 500 million to 2 billion that were probably also levered up on these semis. And by the way, if you get 4-to-1 margin and you're trading with 2 billion, you get 8 billion, right? If you have 10 billion, you have 40 billion. So we don't exactly know how aggressive the leverage was, but if you get 3 or 4, in many cases, if you're working with a prime brokerage, they can give you 5 to 7 times leverage on your money, and you're in these names that are having these massive drawdowns, like obviously things can get intense. So what I'm trying to say here is, I think part of the reason why we have been selling off so aggressively is because of this deleveraging. I think that could be part of the reason, versus something structural about the street being like, the AI build out is stupid, it's over, all these stocks are dead, we don't need to, believe in this broader story. And if it is forced deleveraging, we saw that report by JP Morgan yesterday saying that they think that 90% of the forced selling in the single stock levered ETFs is now complete, given how aggressive the sell-off was in Korea. So their argument is essentially JP Morgan is saying buy the dip on memory, because the risk reward is incredibly attractive now that some of that deleveraging is out of the system. On top of that, take a look at this stat. This is the worst July for the S&P 500 since 2007. Like, you would think we're having an economic crisis. You would think we're having massive unemployment. You would think we're having the credit markets blow up. You would think we're having a housing mortgage crisis that no one saw for 3 years that's now blowing up in our face. Like, you would think we have a global pandemic. It's like, no, what we're having is the semiconductor stocks that are having record earnings across the board re-rate their multiple. And usually a re-rating of multiple, if it's not something structural, which I'm not saying it can't be, maybe, the market hates OpenAI and Anthropic, and as a result of that, they're saying the whole system is a house of cards or whatever. But it feels more like it's just a lot of leverage getting flushed out of the system. And yes, oil prices are going up. Yes, we have geopolitical conflicts. Yes, inflation is not the best situation, but it's not 2020 pandemic. It's not 2008 housing crisis that caused the Great Recession. It's semiconductor stocks that are still up massively year to date. They're just not up as much anymore. So when you look at the Leopold thing, when you look at the sell-off from the forced deleveraging, the fact that he's asking investors for money means that, like, he took a hit, and I'm sure he's not alone. And then, compound that with the millions of retail investors across the entire world. Obviously in South Korea, we know what's happening there. I think you put all those things together, this feels way more like a moment in time where things can easily rebound. They don't have to go back to all-time highs, but they can easily put in a bottom on any catalyst that is positive, aka Trump just, saying that we've ended the war or something, which I don't know if that's going to happen. But theoretically that, that could be what happened, which is where we saw the market go on March 30th versus having to be a 2022 decline. So again, I think the theme of today's show is like, are we going to see a March 30 V-shaped decline? I'm not saying today, July 30th, is going to be that V-shape, although that would be quite ironic that it would be the 30th day of July where we see that. Or are we going to see little bounces in between, and then we eventually get rejected and we have a 2022 gradual decline? Part of the reason I'm saying this as well is because most peak to trough declines are either in line with what we saw in March, 40 to 50%, or significantly worse. In March, you saw, Hood go from 120 to 60. You saw Rocket Lab go from 90 to 57. Like, you saw so many of these names that were down. You saw SoFi go from basically 27 to 14. I mean, pick whatever name you wanted in the high beta space. Micron went from like what?
450 to like 290 or something. Like so many of those names got destroyed by around 40 to 50%. That's exactly what's happening right now. It's either 40, 50% or more. And then it's the worst July we've seen since 2007. So it begs and then you have all this deleveraging, and then you have the Fed uncertainty with Kevin Warsh. So you just ask yourself, like, okay, is the market thinking AI is dead completely, or is the market putting all these things together and it's like really bad, which is leading to the cascading sell-off, which means enough is enough, and at some point things get oversold and look attractive, which is part of the reason I think the semis are pumping right here. We'll see if this lasts in the market open in the next 15 minutes. If this doesn't last, then the 2022 thesis could be in play as well. I'm not denying that is very possible. It's just the 2022 thesis had things that were more fundamental, like rate hikes and lack of earnings growth. We don't have that happening right now, and hopefully we don't get the rate hikes, which leads me to think it's more of a structural sell-off that's based on deleveraging, and I think there's a chance for a V shape. Market's pricing in a recession, but the problem is that we're nowhere near a recession. GDP growth, you need to have negative quarters of GDP growth. We just had a positive quarter. Jobless claims today. Market wanted 200,000. We had 197,000 people file for unemployment. You need 350 to 375,000 people a week to file for unemployment to even think we're getting close to recession. I mean, inflation is a concern and it's an issue, and it's something that Kevin Warsh is upset about, but it's not something that's going to lead to a recession. In fact, it's the opposite. We have too many jobs in the system. We have too many people spending money, which could lead to more inflation, which is the opposite of a recession, right? We just have so much more money into the system. So like, and then you don't have declining earnings growth. S&P 500 right there, up about 1%. So once again, like I think there's a world in which the sell-off has become so freaking extreme and just disgusting. Like yesterday after hours, after Kevin Warsh talked, it just like went down another 2% across the entire market. It was like, okay, like this is getting kind of comical. Like this feels manufactured, it feels fake. And maybe I'm dead wrong. Maybe Micron deserves to go to $300. Maybe Nebius deserves to go back to 70. But if that's not the case, and the earnings are there, and the AI build-out's still real, and this is just a reset of valuations that got a bit too euphoric, which we can all agree in June, it got a bit too euphoric, then I think the bleeding can stop, even if we don't end up V-shaping back to all-time highs, and hopefully that's what we end up seeing. Rock Lab right there, up 4%, CoreWeave up 11%, S&P 500 up 1%. What do people think? What do people think? Do people think we are nearing the bottom, or do people think we have another 10, 15% leg down to go? Which again, if we do have another 10, 15% leg down to go, I don't think that's leverage anymore. I think the leverage is out of the system. There's probably a bit more that's there, but when you have 1.2 million people in South Korea over the past week get liquidated, when you have hedge funds like Leopold that were the best returning hedge funds for the past 6 months asking investors for more money, like I think there's a lot of leverage that's been wiped out. Stocks are down 50 to 65% across all the high beta names. So to me, I'm like, if we go down another 10%, then something's going wrong with this AI trade that the market is fully now starting to feel upset about, which, why is Microsoft up 10%? I mean, at the end of the day, Microsoft is still levered to AI. Yeah, they didn't increase CapEx, but they're still spending a crap ton of money on CapEx. So if the market really hated AI and the market really hated everything derivative of AI, why the hell is Microsoft up 10%? You're not going to give them a 10% move if you think the entire AI bubble is fake and it's all a house of cards, because guess what? Microsoft's going to fall as well, because they were highly levered to various assets in the AI space, including OpenAI. By the way, it was kind of funny. Nadella made a point of their RPO growing yesterday, saying 25% of this RPO is excluding OpenAI. So they made it very clear to separate themselves from some of the frontier labs and be like, hey, this RPO, that we grew by 50 billion doesn't have to do with OpenAI. So don't associate us with OpenAI. So that's what we got. That's what we got. I don't know. Maybe today's a dead cat bounce. Maybe we have another further layer of momentum down to go. That's a good poll. Let me do a poll on that real quick. But, it just feels like the selling has become a bit more exaggerated. Here was Vlad on CNBC 20 minutes ago. Let's hear what he had to say as we get into this market open in about 5 minutes.
It's always hard to gauge these things, but, we release the results, we release the numbers, and then Shib and I, Shib, the CFO of Robinhood, do our earnings call, and we've placed increasing emphasis on the actual earnings call itself. We do it live. We actually did it in the NASDAQ right here with content creators, buy side, sell side, and so we judge ourselves based on how it does after that period. And I think
you can see what happened. If you look at the intraday stock, take a look at it. You'll see. Intraday from yesterday, you will see that there was a dip right at 4 o'clock. But as you guys were speaking, the numbers picked back up.
So that's good. I mean, of course, it's a long-term company. If we look at the quarter, one thing that we're especially proud of is we added 2 new business lines that generate over 100 million in annual revenue. So that's Robinhood Legend, our pro trading platform, and the credit card, which is actually not a trading business, but that's just resonated exceptionally well. I don't know if you guys remember, I was here right after the launch with that. So seeing that become 100 million revenue run rate business with 1 million card holders in circulation in the US, I think is a great sign of diversification there.
Yeah, profits were up by 48%, brokerage trading revenue up by 44%, that events contract business up by 10-fold year over year, which is incredibly impressive. If there's anything that people kind of focus on, though, it'd be the crypto trading revenue down now for a few quarters in a row, and there are people starting to question whether that's permanent, whether the crypto trading is going to be a business that is under pressure.
Yeah, I don't think so. I think long-term crypto is in a growth cycle. It's been volatile. There have been various cycles throughout the past 10 years or so. But we do think long-term there's catalysts. Of course, we're keenly looking for what's going to happen with the strategic reserve. I think there's been a lot of chatter about that and whether other nations and other companies will follow. And we've done a lot to diversify even within crypto.
All right, so we'll go back to that after the bell, as we got the bell coming up in about 5 minutes. I will say, from my experience being at the event, first of all, it was a packed house. The last time I went to their event in New York last year, which was the first time they did an in-person event, it was literally me and 5 other people. Like, no one showed up. So it was a little awkward. It was just like no one was there, right? This time it was a full house. Like, a lot of people showed up. So I think, again, them doing these earnings in person, Vlad literally did a demo during the earnings of the product, if you guys saw on the call. I mean, it was one of those things where I don't think they cared about the stock price reaction. I was talking to Shiv, the CFO, after the call, and, he was just like, dude, the stock's going to do whatever the stock's going to do. But, like, the numbers speak for themselves. And I think you're seeing that sentiment from Vlad there as well. I mean, every single part of the quarter that they needed to execute on, this was not Q1. Q1, rightfully they got criticized because the growth just wasn't there. This quarter, everything you look at, record net deposits at 22 billion. I mean, to get people to take 22 billion out of their high yield savings accounts and JP Morgan's and Bank of America's to go to Robinhood in 90 days is unbelievable. It's just unbelievable. For record, and I think SoFi had a good quarter as well, but SoFi had 5 billion, right? So there's a 4x magnitude of difference, and SoFi added more members than Robinhood did in the quarter. Again, I think SoFi shouldn't have been down 10%. I think the street was pretty stupid. I think SoFi just got caught up in the macro sell-off yesterday. But, for a company to get 22 billion of deposits it's unbelievable. Gold subscribers, 39% year over year, 4.8 million. Assets, almost 400 billion. ARPU, $187. They bought back 4.5 million shares in the quarter as well. Revenues up 32% year over year. It's just everywhere you look, they are expanding, they're growing, they are scaling. By the way, Shiv also said the volumes in July were on average similar to Q2. Now, Q2 had record volumes per day. So July, even in the midst of all this ugliness that we're experiencing, was the exact same as Q2. If August and September are the same or even slightly down, we're still going to have a really good Q3. And so as a result of that, there's zero red flag for me to see as a reason to sell outside of because, if there was like actually some growth concerns or there were some broader, prediction markets, it's 6.5 billion contracts. Prediction markets are also on track to be similar to Q2, even though there's no more World Cup. Like, it's one of those things where we're just looking at it and we're like, all right, if the street wants to take it down, the street's going to take it down. Same thing with SoFi, amazing quarter. If the street's going to take it down, it's whatever. But it's one of those things where you can't deny the growth that they're putting up. And that's why I think it continues to be exciting. ServiceNow right there down 4%, Palantir down 1%, Micron up 6%, NVIDIA, that's up 1.7%. Let's see if NVIDIA can get back up into that 195, 197 range. Nebius, which is like an ugly beating yesterday, fell to freaking $141, is now at 168, as that is up about 14% in the pre-market. Here's what Shkreli just tweeted about situational awareness. And again, given he called the story before the Financial Times reported it, whatever sources he has might end up being accurate on this. He said the situation is not as bad as feared, as per sources. The fund is negative 35% month to date, still up substantially year to date, which, they were up 400% year to date, so that makes sense. And Anthropic is now 50% of the 20 billion remaining AUM, The firm was levered at 4x, which makes sense. Usually 4 to 5x is the leverage for a fund that big. And they met with a variety of partners to discuss an orderly liquidation last week based on the drawdown. So I think the implication from that, and I'm sure we'll get more updates, is he needs to raise money. And if he doesn't raise money, he's going to have to continue to sell stuff to get fully liquid and delevered, which could create, more pain, which is something, other hedge funds would have to deal with as well. But if he ends up raising money because he convinces enough people that this is a opportunity that's generational, like it was in early 2025, then I think the bottom is in. Because at that point, you have less deleveraging across the entire board, not just situational awareness. And that money is going to go right into the names that have gotten absolutely destroyed, which are your CoreWeaves, your Nebuses, which are all getting a nice rebound right here in the pre-market. Susquehanna lowers Meta Platforms to 650 from 900, dude. I did not see that one today. I saw a lot of different downgrades. Again, early in the show, we talked about what's going on with Meta. I think the street is just not convinced about what Zucks is doing. Even for Meta Compute, like Zucks said, there's substantially more demand than supply, which is why we are thinking of a compute business. But then he also mentioned like, we are getting a lot of requests for our compute, but we also have a lot of internal use cases for our compute. And to me, it was like a Sam Altman type of answer. Like Sam Altman yesterday, when they said, hey, when are we not going to be compute constrained? Sam Altman, instead of giving whatever stupid philosophical argument he gave about, if the models become so intense, all he had to say was, hey, companies are barely adopting AI. And the ones that are doing it are barely adopting it themselves, even though they're paying billions of dollars for AI. They're going to be paying tens of billions of dollars for AI in the coming future, even hundreds of billions in terms of the global economy over the next 10 years. We are nowhere near being in a glut because there's so much demand and we've barely tapped the surface. By the way, the OpenAI CFO came out yesterday and said their ARR in the month of July was greater than all of Q2. So you do have a little bit of positive momentum right there in the news flow in terms of OpenAI getting the revenues to get back up. But that's what Zucks needed to say yesterday. Zucks needed to say, instead of focusing on the internal parts of Meta superintelligence that no one cares about, that the street's not giving a premium to, he could still do it, but he needed to say, we really think there's a new stream of revenue to sell compute to all these other companies. But instead, he doubled down on we think we're going to achieve superintelligence, and there's a lot of use cases in Meta that we're focusing on, and it just wasn't what the stock market wanted to hear. The market wanted to hear you're going to build an AWS, a GCP competitor, and I don't think Zucks on the call really doubled down on that. And as a result, I think the market is just afraid of where that ROI is ultimately going. All right, folks, here we go. Let's see if we can get a little bit of a rebound after a couple of ugly days. Thursday, July 30th. Thank you all for being here. The stock market is now open. All right, wake your ass up. Let's get into it. The S&P 500, 735. As that opens up 1%. Microsoft, are we getting a move? Microsoft, 11%. We are indeed getting a move. It has been a long time since Mr. Microsoft actually was up 11% right there. 435.88. The stock was at 390 yesterday. Let's see if that can just try to get a hold on to that. SanDisk, that's up 11%. Palantir down 1%. ServiceNow down 2% again. The software name is probably going down today if the semis are going to catch a bid. Nebius, 170. 141 to 170. That's up 15% on the day. Rocket Lab, that's up 4%. CoreWeave, that's up 14%. SK Hynix, that's up 8%. Tesla gets a 3 handle again as that one fell below 300 yesterday. 293 was where we saw in Tesla. Robinhood, unfortunately, getting a red candle, getting a dump as soon as we open. So let's see how low they let her go, down about 1.2%. Maybe that's just the market open dump. If not, then maybe this one is going to continue to kind of struggle in that $90 range. MasterCard, that's up 2.7%. ARM, wow, 17% on ARM. Goodness gracious. I mean, did anything fundamental change between yesterday and today around ARM? No, right? So 100%, these are the algos that are going back to the semis. The question is, are they going back for a fling, or are they going back to, once again, reconcile their differences and ultimately to, have a long-term relationship that can have many anniversaries for the future to come. Hopefully we are in that scenario. ARM right there up 16%. Applied Optoelectronics, that's up 10%. Lumentum, that's up 8%. BM&R is up 3%. Marvell's up 8%. Dell's up 5%. SMCI up 4.3%. S&P 500, 735 right there. Lam Research, which had an amazing earnings, to be honest. That stock as well getting some love. Lam Research is green. S&P 500, 735. Chaz has never used that analogy again. Aren't you at least kind of impressed I came up with that on the spot? Do I at least get a little bit of credit for coming up with it on the spot? Lam Research, 20%. Wow, Microsoft, 440. 440. Let's see if we can actually get it. That's up 12.6%. There you go. That is green. I don't know why they're dumping hood right here, but they are dumping hood. I don't think it deserves to be dumped, but nonetheless, the market will do what the market wants to do. Meta, 10% down. No one is stepping in on this meta dip. Absolutely no one is stepping in right here on this meta dip. 527. To be honest, the hyperscalers do tend to go down with the software names when the semis go up. And look at Nebius right there, up 18%. If the semis are actually going to go up today, outside of Microsoft, maybe the hyperscalers, is it Google as well? Google is red, typical on a day like this. Amazon slightly up. Okay, they have earnings today, so that might be a little different. And then Nvidia, which is in the semis, that is up. So it's really Google and Meta. Also, maybe Google's feeling some of Meta's pain because at the end of the day, they're both in advertising, and maybe the street is having some of those advertising fears on Meta not growing as much on Google, even though Google, search revenue grew substantially. But those two stocks being down right there. Meta down 9.6, Palantir down about 1%, Rocket Lab down 3.8, Nokia, that should be up a good amount. Nokia is up about 8% on the day. That is green. Oracle, which signed a contract with Google. Maybe that's also why the street's down, because Google's going to be spending a lot of money on Oracle. A lot of money is subjective because, Google has a lot of money to spend, but good for Oracle because they're the beneficiary of the spend. Bad for Google because they're the one spending. So maybe that's also part of the reason why it's taking a hit. Marvell up 8% right there. BMR up 3.3%. Someone said they sold their Microsoft. Honestly, I bought some Microsoft at 385. I mean, I didn't buy a massive position, so it's nothing that I'm like, oh, I have to sell right here. But if you load it up pretty heavy in that 370 to 390 range, this is a pretty big move. If you're afraid that the market's going to fade this entire pump, I mean, selling some calls right here, taking some profits is not that crazy. Having said that, I think they cost rationalized on CapEx enough to get the street excited. My only concern is they didn't announce 2027 guidance on CapEx. When they do that, and it's going to be, another 150 billion more than what they spent in 2026, does the street still think that Microsoft has their shit together when it comes to not spending a ton on CapEx? I don't know, but they didn't give that guide yesterday, and they kept 2026 the same, which is, I think, what kept the stock elevated. SanDisk right there up 14%. Bloom, which honestly deserved to be up 20% after those earnings and actually fell 15% yesterday, that's up 21. Folks, this move has to hold now. It has to hold. If a Bloom 20% ends up going to a Bloom 5%, if a SanDisk 14% ends up going to a SanDisk red, if a Nebius 18% ends up going to a Nebius back to 150, then that would be pretty ugly if it ends up getting sold off right here. We really need to see this stick. It's very encouraging, but it's only been 5 minutes. So as long as this sticks throughout the day, I wouldn't say we're back, but we're at least potentially getting to the point where the market is done with the exuberant selling and at least can stop some of the bleeding, which is what I think that's the only thing people are asking for right now. It's like, let's just stop some of the bleeding and let's consolidate a little bit. 15 to 20% higher than where we were, because yesterday just felt a bit egregious. SMH right there, that's up 5% as well as that continues to go green. Quanta Power had a great earnings as well. That stock up 15%. Keel up 17%. I mean, a lot of these names, they're going to get the bid today in the midst of this rebound, which hopefully sustains itself as an actual rebound. Micron, are we pushing 800? We are back to 804, up about 8.85% again. Micron hit 705 yesterday. 705. Yeah, that's another. I mean, look, today, if you're afraid that this move's going to get faded, this is where you sell calls or buy puts. If you have a substantial position in this stuff and you're like, look, I cannot let this thing get back down to the levels it was at yesterday, this is where you're going to have to sell some calls or buy some puts or sell some stock, right? Deleverage a bit. I think that's the other thing that could create some selling pressure today. I think a lot of people want to delever, but they needed a bounce. And today, obviously, in the first 5 minutes, we are definitely seeing somewhat of a bounce. And that could create some selling into the bounce. Now, maybe the selling is not the best idea because that bounce ends up turning into a multi-day bounce, multi-week bounce, who knows? But I definitely think there are some people here that could be like, all right, at least let me get at a break even or take a small loss on this bounce versus selling at what could have been the bottom yesterday and taking a much bigger loss. Hims right there. Hims got sued yesterday, which is why the thing fell 15%. Unfortunately, that name is just caught up in a lot of legal lawsuits and troubles, which is why that name has been taking a hit. Microsoft right there, 15% on the day. 15% on Mr. Microsoft, 450. Oscar, that's up on the day, $30 as well. There is not any news that I can necessarily report. The Middle East conflict theoretically is bad because Trump started attacking last night again in response to the Jordan attack. Having said that, I do think there's a world where it's a tit for tat. And it's like, okay, you attacked one of our bases. We have to attack one of your bases. Now we're even. And now we can maybe get back to negotiating. Maybe I'm stretching there. But if that's the case, then if the market prices that in, maybe we start to see a little bit of de-escalation. I mean, oil is down 1% this morning. So maybe it's not the craziest theory for how the market's thinking. But Bloom right there at 197. I don't know why they're taking Hood down. I really don't get it. Especially because Hood theoretically is supposed to move with the semis, right? Because the semis create so much trading volume that Hood's in that high beta. I really don't know. Like, someone has something in the quarter that they found that was a red flag that the street's upset about, let me know. But the only thing you could point to is like, okay, it's not sustainable growth. But then the CFO said, well, the trading volumes, which is how Hood makes their money in July, was equivalent to all of Q2. And Q2 were record trading volumes. So that implies that the revenue beat for Q3 year over year is going to be even greater than 30% when you do the numbers. So I don't know. I honestly do not know why that one's taking a hit. Oracle right there, that's up 3.9%. AMD up 7.4%. As that continues to go green. Why is Salesforce down? Well, we know if Micron and SanDisk are up 10%, Micron right there now up 10% on the day, something has to go down. Again, I am convinced that the funds that are levered on the semis, this Leopold story made it even more obvious, they're shorting the software stocks as their hedge. They need a short if they're going to go this levered long. And software ended up being the perfect short for them to go after because of this stupid Claude's going to kill every software company narrative. And then the media ran with that narrative. And now you've got the software CEOs trying to figure out how to tell people this is stupid, but it's not really working because the leverage of the funds is working against them. And as a result, that's why ServiceNow, Salesforce, all these names are down right here. PayPal, that's also down about 1.2%. Nebius, are we in the 180s? Nebius, 177, very close to the 180s. What are people doing here? Are you buying into the strength? Are you selling calls? Are you buying protection? Are you taking some profits? Are you getting out break even? Or are you just sitting back and letting it play out right here? Curious to see kind of how people are thinking of this. Again, if this move gets faded, if this Micron 9% goes red, I mean, we have some issues at that point. Like at some point, it's the street just not agreeing that this AI build out is happening. And, I was listening to some analysts last night. The reason they're confused is because the hyperscalers already committed to the CapEx. They're spending. Like the money is going to go to these semiconductor companies. So if the market's looking like 3 years out and is like, okay, that's going to be one more year of good earnings, but the next 2 years are going to be horrible, aka Micron's 2028 is going to be good, but 2029, 2030 are going to be horrible. That goes against Jensen's argument that we're 10xing the semiconductor industry. But it means the market is in doubt and they're going to need another year of results to feel it's sustainable. Especially when you take a look at this. The market is currently overlooking the lowest price to earnings growth ratio on the S&P 500 in more than 30 years. We are trading at a 0.81 peg. Usually under 1 tends to be cheap on the S&P 500. And the S&P is still up 7% year to date, which means it's all the companies in the S&P that are contributing to this, not just the semiconductor names, because this is after the semiconductor names have had this big of a drawdown. So once again, and then it's the worst July we've had since 2007. Like you put those things together and you're like, all right, like enough is enough. Like if we need to go another 10% down, there's something different besides a deleveraging event. Because when there's a deleveraging event, like the pain happens, it's ruthless, someone blows up, and then you move on, which I feel like could happen here. If it's a 2022 structural decline every month, we end up going down another 3-4%, then there's something different that we're all missing right here that the market is trying to reconcile with as well. AMD 7.6% as that continues to go green. It's very similar to Bill Huang, as a lot of people are mentioning, who blew up his fund. I believe this was in 2021, if I'm not wrong. And his stocks, the biggest stock. So the thing is, Leopold has a Bloom and SanDisk and Micron and Intel and all those names, which actually have, real earnings growth. They're part of this AI revolution. They're like actually doing stuff that really matters when it comes to this AI build out. Bill Huang had Viacom CBS, which is now Paramount, Baidu, Tencent Music, Discovery, which is now Warner Brothers. He rode all of those down 50 to 65%. And the reason why the fund ultimately got margin called is because Viacom did a secondary offering one day, and they were levered and they weren't prepared for it. And then they couldn't meet their margin call. And then boom, the fund blew up. Bloom Energy right there, 200, up 22% of the day. So, when you talk Viacom CBS caused the collapse of one of the biggest hedge funds in the past 5 years. I don't know if SanDisk is going to cause the collapse of Leopold, right? Because at the end of the day, you look at their multiple, you look at their earnings growth, you're like, wait a second. Like at some point, if it gets too cheap, people don't really care about Viacom CBS, but they definitely would be interested in a name like SanDisk. And as a result of that, I don't know if his fund necessarily has to create some cataclysmic decline throughout the entire AI wave. NVIDIA right there, up about 1.3%. NVIDIA got to 194.50. Now it's down. Nebius, I mean, we needed a move like this. We needed a freaking move like this. 23% up on the day, 183. CoreWeave, 70, up 15%. Yeah, we needed a move this was needed. This was absolutely needed. I mean, if we didn't have a move like this, it would have been much uglier. I am just hoping now we can hold on to it. And obviously Figma, Adobe, all those Zeta. Zeta was at 23 yesterday. Why is it at 21.29? Because the software names are honestly, if the software names have to be the collateral for the semis to go up, at this point it's like, do what you got to do. Do what you freaking got to do. Because it's not like the software names went up that much when the semis went down. It's not like when the semis had the worst July since 2007, the worst deleveraging we've seen in 15 years. The software names went up that much. If you're telling me 115 on ServiceNow was the pump, it's like, okay. So if they need to stay down for the semis to go up for the rest of the year so that we can at least have some stability, then all right, whatever. Do what you have to do. But this was a much, much needed move at this moment right now. CNBC, situational awareness is unwinding trades and may liquidate assets, working with prime brokers, Bank of America, Goldman Sachs, and JP Morgan Chase to meet margin requirements or reduce positions. So that's why this bounce is also really important. Psychologically, Leopold needs to call his LPs and say, hey guys, look at the bounce on Nebius. Look at Bloom. Look at SanDisk. I'm not stupid. I'm not wasting your money. I know what I'm doing here. Give me more of it. Nebius was at 300. Even today, it's at 180. There's an opportunity to buy the dip. It's a generational build out. And as a result, if he can convince his prime brokers to give him some time to raise that money so that he can meet his margin requirements, you have less deleveraging selling pressure, which is why this bounce is really important. I am just hoping that it can sustain itself throughout the day. That is the big question now going into the end of the day. Seagate right there. Wow, Seagate, 17%. Goodness. One day doesn't mean a lot. I agree with you. One green day does not mean a lot, but we just needed to not have another red day, like 4 red days in a row, especially when the first 3 were not just small red days. We're just like unbelievably ugly. And yesterday was kind of the cherry on top with the FOMC, sell-off that we had after hours. Micron right there up 817 now. We just needed somewhat of a bounce. This is not healthy. I agree with you. It's not healthy. I'm not saying it is healthy, which is why for the next few days we need to, look, if Nebius gives back 8% tomorrow from 25%, okay, still 17%, right? Still 17% move from the lows, which is, again, what we need to at least have some level of stability. Now, if it gives away all 25%, then it's like, all right, it is what it is. All of this is fake. So I don't expect these names to hold on to the bounces for the coming days as aggressively, but if they can just somewhat normalize and consolidate, maybe that's what we need. AMD right there, 470. Now, here's the other question. If people think that these semiconductor names are still overvalued, so for example, if the market still thinks Nebius at 190 makes no sense, or AMD at 470 makes no sense, or Intel, which is probably 95 today, Intel at 89, which is up 9%, makes no sense. If the market really, really, really is concerned about fundamental valuations right here, and is like, we're looking at the price to earnings and we're saying that this is, an irrational price to pay, then obviously there's going to be some more selling pressure. The market has not cared about that all year. In fact, I don't even think the market cared about it during the sell-off. I think that probably played a role because, when you trade at a high beta multiple, your multiple can compress much more easily than if you don't trade at that multiple. But again, I think the deleveraging and the fears of Kimi K3 and OpenAI and all this stuff kind of really exacerbated that deleveraging, especially in South Korea. That's what really caused the sell-off. I don't think the market woke up and was like, oh, Bloom's expensive. Now, is Bloom expensive? Was Bloom expensive at 300? 100%. But I don't think that's why it sold off. I think it sold off for all the other reasons. And then the fact that it is expensive, compounds on that. So is Bloom at 220 or 215 more reasonable? But you're not going to tell me that Bloom yesterday is at 157 and today it's at 207, up 30%. And that's because the market cares about valuation, because the market woke up on Thursday after going to sleep on Wednesday and was like, yeah, Bloom's valuation deserves to be up 30%. Like all of this is programmatic and momentum oriented, which is probably not healthy. But some of that momentum needs to come back and consolidate so that the overall net selling pressure can start to dissipate. And hopefully that's what we see. I agree. Bloom had an amazing earnings, but they had an amazing earnings 2 days ago, right? So the market reacting today versus 2 days ago means that there was some level of uncertainty or some level of sentiment that changed. The FOMC, getting out of the system, I think was also important. And I think that helped. ARM is already down by 50%. That's fair. Now, ARM's multiple is one of the more egregious multiples that's out there. The stock trades at 209 times earnings after the 50% decline. Let me say that again. It trades at 209 times earnings after a 50% decline, and it still trades at 55 times sales after a 50% drop. So there are some names that are just like, okay, this looks stupid, even with its growth, because those multiples can't be sustained. They're not growing like NVIDIA numbers, which is why I understand why it's down 50%. But does ARM need to go back to like $100? Probably not. So if they can consolidate around this 250, 300 range, and maybe that's where it ends up going. Now, maybe it goes right back to 450, but I feel like that ends up being too euphoric again, which is also not healthy. So maybe we don't see the all-time highs, but maybe we also don't have to be back at the ugliness of the lows that we were at yesterday. Rock Lab, that's up 7% at 63. Why is Zeta and Duolingo down? Again, I've been saying this every day for 6 months. I don't know if you guys believe me or not, but I really think if the semis go up, the software names like a Duolingo or a Zeta have to go down. It's so stupid, but it is what it is. And the worst part about this today is Microsoft is one of the biggest software names, and Microsoft's up 15%, 451 high of day, and that still is not helping the software names because they're just shorted so heavily in this pair trade with semis. The takeaway from that is that the software names, I think, are amazing buys. Zeta, Shopify, Reddit, Palantir, ServiceNow. I think those names are really good valuations, high quality companies that are growing their earnings. The SaaS is dead narrative, I think, is very stupid. But if the semis are going to go up, you just have to be ready for the market to normalize the semis and software names going up together. I think one day they will go up together. And I think probably you're going to need an Anthropic and OpenAI to officially go public so that the fear of Anthropic killing the SaaS companies is over. And you just need sustained earnings growth from the software companies. But right now it's a pair trade. And that pair trade means you're going to sacrifice outperformance if the semis have a massive move, if you're heavily in the software names. NVIDIA right there, 193. As that continues to go being, wow, Keel up 27%. Goodness gracious. Goodness freaking gracious. Do you think SpaceX is bottomed? No. Now, here's the thing. I think SpaceX is bottomed if momentum is the only factor that matters for the market. But with SpaceX, which is one of the highest beta momentum stocks, I don't think it's momentum. I think it's the share unlocks that have nothing to do with any of the other companies. Like SanDisk has nothing, SanDisk is momentum, so is SpaceX, but SanDisk has all their shares outstanding. SpaceX has 96% of shares that are not outstanding. So although SpaceX will have green days with the momentum names, unfortunately, those share unlocks are going to affect SpaceX specifically, which is the issue versus the other momentum names. SoFi right there getting a nice 3% rebound as well as that continues to go green. Is this true? Is this accurate? CNBC says situational awareness sells entire public investment book. Is that legit? I mean, if that's the case, dude, I find that hard to believe. If that's the case, I feel like we bottomed. Dude, I feel like if he had to sell every single stock that he owned, I think we bottomed. I think we're done. No way. Did he have to sell every single stock? I don't think so, dude. A bunch of you guys are saying that's real headline. Sam posted as well. Let me see. The Financial Times article didn't say that he had to sell everything. It said he was down and he was looking to raise more money. Situational awareness is unwinding its entire public investment portfolio. Okay, we're going to have to get more data on this to see if it's true. We're going to have to see. We're going to have to see. But if it is, bro, yeah, he ended up being the sacrificial lamb, dude. I mean, like, if this guy had to sell everything after 2,000% gains, he still made money. Could have made more if he sold the top, but it is what it is. But I think that's enough, bro. If the poster child of AI and managing money in the world of AI had to get liquidated, I feel like that was it. S&P up 1%. But we're going to see. I don't know if we have the most accurate sources on this. Now, maybe he had to sell a bunch of stuff, but not his entire portfolio. Because at the end of the day, dude, if you're getting margin called for a few billion and you're up a few billion even after a 40% drawdown, like, and your prime brokers are not willing to give you any rope and you can't raise any money or you're not raising enough money, you have to sell, which explains why it explains why Nebius was down 25% compared to yesterday. Like, there's just a lot more sellers than buyers, not because anything changed inside of Nebius's backlog, not because there was Nebius earnings. It's because there was a forced deleveraging event. That would be the more logical explanation for what's happening right here. Hood trying to get back to 90. Let's see if we can get a little bit of a rebound from this 87 level. SMH still up 4%. He did use Forex leverage. That's correct. Yeah, I'm seeing this headline exited all of its public equity trades. I wonder if that's legit. I wonder if that's actually legit. Why do you think Qualcomm is down? Qualcomm had a crappy quarter. Qualcomm is proving why this stock has done nothing in the past 5 years, whereas every other semiconductor stock is up like 200%. A lot of stuff slowed down. They're trying to pivot and make the focus on data centers, but they cited memory inflation as a big concern around prices, and they cited memory inflation as an issue with the smartphone market not bottoming out yet, which we kind of already knew that the Snapdragon stuff in smartphones wasn't going to necessarily do the best, especially if you listen to what Apple has been saying. So it's one of those things where it just wasn't impressive, dude. Like, yeah, the stock is cheap, but it was not impressive compared to ASML or TSM or even Air Test Systems. Like, there's so many other semiconductor companies that are playing a pivotal role in this build out. And now, having said that, Qualcomm's 2029 revenue trajectory is still on track, and I think that's what makes the stock cheap. But short term, there just wasn't a really big, meaningful quarter that like you would expect out of a semiconductor name. And we're so used to those massive quarters that I don't think we got that out of Qualcomm. Rock Lab right there, almost 64, as that's continuing to try to make a move. Wow, Amazon actually up 4. Okay, so Amazon and Apple today are going to be super important. I have no idea if Amazon is going to pull a Microsoft and leave CapEx guidance unchanged and try to cost rationalize, or they're going to pull a Google and say, we're spending more, love it or hate it, this is what we're doing. I kind of think they're going to pull a Google. Sentiment does feel a little bit better today, so maybe the market is okay with them because the semis are up. But then again, maybe if the semis are up because of companies like Amazon spending hundreds of billions of dollars, Bloom Energy 30% right there, then maybe Amazon has to go down because obviously they're the CapEx spender, not the CapEx beneficiary. So we're going to have to see today. We are going to have to see. Can you explain the Leopold situation very quickly? Yeah, so this is a guy in 2024, raised $250 million, ex-OpenAI. He has a girlfriend who works at Anthropic. He invested in pretty much every AI picks and shovels play, grew the AUM from 250 million to 20 billion, was super levered up, 4x leverage in the month of June, was up 450%. And obviously, we've seen what happened in July. The Financial Times got a copy of the letter he sent to his investors asking to raise capital. And so the takeaway from this is, hey, one of the most leveraged funds in AI is pseudo getting liquidated, which means a lot of other levered funds are also probably getting liquidated, which means the sell-off, the indiscriminate sell-off we've seen over the past few weeks is probably more of a structural deleveraging event, NVIDIA 194, versus the market just waking up and saying they don't believe in AI anymore. And yeah, I actually think that's a good thing, because that means the market's not doubting AI or everything that the assumptions are built upon. The market just the market just had to deal with the selling pressure. Nebius 30%, dude. Goodness gracious. I mean, I think most people are probably at least break even on Nebius. At least somewhat break even right here. If forget even buying the dip yesterday, if you bought the dip over the past couple of weeks, I mean, the stock was around that 170, 180 range way before it dropped to the 140s yesterday, which again, 140s felt kind of stupid. It felt like March 30th. I remember Rocket Lab at 57 on March 30th felt stupid. I remember Robinhood at 65 on March 30th felt stupid. I bought Broadcom $292. Broadcom $292 on March 30th. It felt kind of stupid. Some of the prices yesterday felt kind of stupid. And so the rebound right here, I think, is a reflection of the market saying, all right, enough is enough. And even if they hold on to 50% of the gain today, it's still going to be a great day. Where's Meta? It is not a great day for Meta. Meta's still down 9%. But it does seem like some of that stupidity is starting to get interpreted in a different direction. ServiceNow down 6%. Again, no one cares about ServiceNow. No one cares about Zeta. No one cares about Reddit. No one cares about Shopify. Companies, strong earnings, good trajectories. They don't care. They are caught up as collateral damage in the semiconductor trade. And if Nebius is up 30% in a day, there's no way in hell ServiceNow or Zeta can go up 5% like they were up yesterday. This is what I've been saying since Monday. I've been saying it since Monday. The software rotation is fake. It's not structural. It's not real, because as soon as the semis go up, they end up going right back down. For the software rotation to have been real, for the market to believe that, you know, the new trade is the software as a service companies, which, by the way, that's like so 2010, right? Like, not saying software companies can't do well. I have a bunch of them, but like, that's not really where the zeitgeist of culture is right now when we think about where technology is going. For the market to have thought the software companies were the next trade, in July, IGV should have been up 20%. It wasn't. It was up 1%. Like, the market didn't buy into it, even with the semi sell-off. So as soon as the semis go up, of course the software names go down. Like, it's not surprising. And I hate it, but I also have accepted, I've come to grips with this reality, dude. That's why it doesn't, like, I remember in like April, I was annoyed by it. I'm not annoyed anymore. I'm like, I get it. Like, it is what it is. As NVIDIA, it's 195. And I'm not even that happy about it because I have massive semiconductor exposure. I'm just like, I've accepted the truth. Some people can't handle the truth. I can handle the truth. You want the truth, you can't handle it, I can handle it. Where is that fucking movie? A Few Good Men, classic, okay? Absolute classic. 1992 classic. I can handle the truth. And that is why when the neoclouds pump, the software names go down. NVIDIA, almost 196. Almost 196. Jack Nicholson, absolutely classic. Can handle the truth. I can handle it. Are you saying software will die? No, I am not saying software will die. I am saying software continues to be stuck in the yin and yang of what happens with the semis. Long term, I think the software names are buys, which is why I own Shopify and Reddit and Zeta and Palantir. But I'm not going to complain anymore about software being down 5% because I know it's not anything rational. So it's like, it is what it is. And I just look at the semi part of my portfolio and say, well, at least that's up today. And eventually I think it'll mature out. But in the short term, we need to see evidence of that pair trade unwinding. 840 on Micron, 13%. Micron has added about 140 billion of market cap right there. Obviously a very, very strong day for your memory names as Nebius hits 192. You weren't even born in 1992. That doesn't mean I didn't watch the movie. It doesn't mean I didn't watch the freaking movie. Microsoft 450. Again, for those wondering why Microsoft is up, they said they're going to not spend more on CapEx in 2026. That's it. Simple enough. And I think that's the reason. Also, again, the software part of their business, as much as I'm shitting on software right now, the software part of their business did accelerate. And I think that's enough, which is why the software itself is even worse. The fact that Microsoft, which is the leader of IGV, is up 15%, partly because the market's happy about their software business and the software names can't get any bid, just goes to show that when the semis go up, the software names end up being the ones that take the pain in order for the semis to go up. Meta right there, down 9.5%, 529, as the hyperscalers also, unfortunately, are taking the hit. Do you think the software move comes after the hardware? Yes, but not in the short term when the hardware build out is as massive as it is. Again, if this is a generational build out, there's only so much money that's out there, right? Like if you're a fund and you have $1, you can either put 50 cents in software, 50 cents in semis, or you can pick $1 in semis. And so I think people are making that choice that this is where most of the earnings growth is right now. Not like software is not growing earnings, but they're not growing it at the level that the semis are. Some of the software names are, but a lot of them aren't, especially the legacy ones like Adobe and Salesforce. And so the trade ends up being the semi names. And it just is what it is. But long term, again, I think the software companies will be fine. It's just short term, they're taking the hit. Quantum's also having a good day. That's up. QBTS, that's getting a 9% move. Again, a lot of those names got hit as well, as they took a bit of an ugly move. I feel like there's a dead cat bounce. It might be a dead cat bounce. GEV up 9%, but the point is, it is something for us to reconcile with. I mean, this is why you can't get so bearish semis, because if the semiconductor sell-off is over, that momentum comes back, and you can't get super bullish software. Because trust me, I've been through that phase. You know those stages of like regret, denial. I went through that. Early June, I was like SaaS summer. It hasn't been a SaaS summer. And so I went through that phase where every software stock pumped, and I was like, okay, yeah, software's back. And then you slowly realize, no, it's not back. It's just being used in the moment because the semis are having a little bit of a hiccup. And until you actually see real money going into IGV, software is not back. So it is what it is. Nothing to complain about, but at least it's something to understand. Like Shopify was pushing 133 yesterday. Why the hell is it down 3%? Like what news could make Shopify go down 3% today? If anything, AI is only increasing their GMV. Like you analyze all these businesses and how AI helps them versus commoditizes them. The 5%, literally 5 to 7% swings intraday, every day, up or down, starts to become comical. Corning, that's up 7%. This thing got to 114. And then ASTS, that is up 8%. All right, let's see if we can get some of this Leopold coverage and figure out if this guy actually sold a ton of his stocks. Because some reports are saying that they sold everything. And if that's true, that would be pretty freaking crazy. Let's pull this up. Let's pull this up right here.
It's a very narrow gain today.
Get to this OpenAI briefly. Valedictorian at Columbia, graduated at 19. Clearly a very smart fellow, but also willing to take a lot of risk. Now that had accrued to his benefit enormously with incredible gains in this hedge fund, the likes of which it began life as a $150 million, $200 million hedge fund and soared to values in excess, I'm told, of $24 billion. In fact, net asset value may have been even far above that, though I haven't confirmed it. Why do I mention all that? Because it no longer is in the public investing game, and actually it also may be paring back some of its private investments. Sources familiar with the situation tell me that after significant reversals on both its long equity portfolio that was concentrated in names such as SK Hynix and so many of the semiconductor related names and the AI names that we've seen go up for so long until, let's call it, July 1st, and short those names right there that have soared over, let's call it, the last month. You can see there, well, that is a recipe for pain, particularly when you're as much as 4 times levered or more. And that is why, as we've been reporting this morning, the company has now exited its public investments with a giant trade that has taken place, I'm told, by people familiar with the situation, to one hedge fund. Sizable it must be, though I don't know the name. I can take some guesses, of course. And it is out of all of its public investments, both the short portfolio and the longs as well. I'm also hearing from different people that, in fact, there has been a sale of a significant stake in Anthropic as well. Brenner holding as much as what was told is between a $4.5 and $5 billion stake. I am told that they have exited that stake as well at Anthropic, though this has not been confirmed. The firm itself has not commented. An outside PR advisor to the firm has not offered comment on this as well. But at $1 trillion value for Anthropic, that's a significant piece, of course, of that company as well. So what is going to be left of situational awareness at this point, Mike, is not completely clear to me. It's a dynamic situation, of course, as you might imagine, but it does appear they're no longer a public investor and their private portfolio may have been pared back significantly. If you were going to sell something to create liquidity, it would.
I can't believe it. I can't believe it. I legitimately cannot believe it. And what is scaring me a little bit hearing this news, what's really scaring me hearing this news, guys, is like, did he sell the bottom or did he realize the trade is done? Now, if he was asking for investor capital on July 24th, which is what the Financial Times reported, then I think he wanted to keep staying in the trades, but maybe there was no money he could raise. Both scenarios are kind of crazy. If he thinks the trade is over and said, screw it, I'm out, and sold 50% of his Anthropic, which is supposed to be one of the biggest IPOs ever, right? Like, why would you sell it right now? Maybe he feels the trade is over. If it's the other scenario that he got liquidated and him selling was the bottom and him selling 50% of Anthropic was to cover the margin call, which is crazy that he had to sell 50% of his Anthropic just to like break even and not, continue to get liquidated. And now if we rally from here, then maybe that was the event that needed to happen, which there's always some fund that blows up that you got to flush that out of the system in order for us to go higher. I mean, this is incredible. And I'm not sure which of the scenarios is correct, but either he lost belief in AI and said, all right, I'm out, we're done. Or he was forced to sell just the entire, if he was that levered where the entire book had to be sold, he couldn't leave a single stock left, then the liquidation must have been that bad, which is also why the pain over the past couple of days maybe felt that bad.
Likely be an Anthropic.
Sure. I mean,
demand for that company.
That's a significant stake when you're talking about the current assumed potential market value of Anthropic. In terms of the real money that's ever kind of changed hands to fund Anthropic, it's even bigger, right? $4 billion kind of swinging this way or that. What I take away from it is that you can absolutely guarantee that this was representative of an entire cohort of investors out there. And so, we talked about this like a month ago. It's like, oh, you're a momentum investor, you're an earnings revision investor, you're a growth at a reasonable price. You own semis. The bottleneck trade became its own bottleneck. So you layer it on top of what we all know is going on in South Korea and all the leverage trading that has actually been purged out of that market and something like this. And okay, maybe this stuff's going to find its value relative to its prospects and its fundamentals. I'm not saying it's over, but it's always closer to the end of one of these episodes than the beginning when you start hearing about casualties like this.
Without a doubt, and I think it's a very important point you raised. There are a number of hedge funds that were following a similar strategy, and we mentioned this gentleman because he has a very large profile amongst a big cohort of younger investors as well on the retail front, who are similarly mirroring some of his trades, which again had led to enormous performance. I mean, gains like which we've never seen. It's rare that you see.
Apparently there was a single buyer that he sold to. So his entire public equity books, there was a single buyer, both long and short positions. We don't know who the buyer is. I would imagine it has to be one of the bigger hedge funds that are out there that could have absorbed his book. It wasn't like he didn't run an auction. It was one buyer that came in and took away everything.
See a hedge fund start only a year and a half, 2 years ago, what, $200 million and get to the levels that he has without raising any new money, apparently. So incredible. But that said, at this point, obviously a very different story. And I don't know where it all ends up.
Right.
I imagine investors.
You guys think it was Jane Street? I mean, they were investors in the. That's the other thing, bro. Jane Street doesn't invest in small funds because Jane Street does $40 billion a year. They don't need to invest in tiny funds. He couldn't have gone to Jane Street and said, "Guys, can I get a little loan here?" If Jane Street wasn't, because again, they invested in the fund a year ago, if they weren't willing to help him navigate this, dude, what if Jane Street sharked him? What if Jane Street what if Jane Street invested in the guy a year ago and then took all of his shit at the bottom, knowing that it was either that or he gets liquidated, took his stuff 50 cents on the dollar? I mean, this is turning into one of the most incredible and craziest stories of 2026 right now.
Who backed Ashton Brenner in 2024 when he left OpenAI, David, operated under the assumption that he had deep insights on the AI build-out, which companies were best positioned to win, given his time at a frontier AI model. Now, perhaps a different story here, given the stress that fund is facing.
Yeah, I mean, the leverage is always what gets you.
Sure.
Every time. And so they were taking a lot of risk there, it would appear. I don't know what the ultimate performance numbers are going to look like, though, either.
Right.
It's very much unclear, given he was up enormously as of the end of the second quarter.
Right. It's true, because all of those stocks on the long side, they're still up really big,
yes,
like on a year-to-date, one-year basis. So, who knows what with this portfolio trade that, where the buyer sets the price, we'll see where they got marked. But it's interesting.
Yeah.
And we have more tonight. We'll get
Plenty.
learn a lot
Yeah.
more.
Apple, Amazon,
Yeah.
we'll be there for it. Yeah.
Mike, thanks. Joining us to talk about some of the action that we got last night in Microsoft and Meta is Jefferies senior analyst Brent Thill. Brent,
This is guys, this is just like Leopold gets liquidated. Out of all people to get liquidated, it ends up being Leopold. Nebby is still up 27%. Broadcom still up 4%. Rocket Lab still up 7%. Seeing some red candles come in, which is expected because obviously, it's been a massive, massive move today. AMD still up 13%. Is this not crazy, guys? Is this not legitimately crazy? He was up he took 250 million and turned it into 20 billion. I mean, he just led the Series A for the freaking what's the guy? For Fluid Stack, which is a new NeoCloud at $8 billion valuation. They let us, the situational awareness let us 700, what was it? It was 650 or $700 million round for Fluid Stack, which is a NeoCloud at an $8.5 billion valuation. I mean, if the guy's getting liquidated, that means they're not leading the round anymore. If the entire, unless they have some private parts left, but if they sold 50% of the Anthropic stake, can you really keep a couple $100 million stake in a NeoCloud? Like, this is SanDisk up 20%. I mean, this is fascinating from so many different levels. So many different freaking levels here. He was 4x leveraged. Of course, this happened. Yeah, I know that's fair. He was 4x leveraged, so this had the potential to happen. I mean, look, here's the thing. If the assets were 20 billion and he was 4x levered and he actually was playing with 80 billion or even 50 billion, because that's the crazy thing about margin, right? Like, if you have $20 billion and you buy 80 billion worth of stock because you have, the 4x leverage, and then that 80 billion turns into 40 billion, you're down 40 billion. I mean, your 20 billion that you had is gone because the other 20 billion, it's not yours. It was given to your line of credit dissipates immediately if the value of the asset that you're getting the line of credit against goes down by 60% in a month. And the puts can't really save you unless you're hedged perfectly. NVIDIA right there up 3%. Because for the puts or the covered calls or whatever to match the exact decline of your stock means they also have to match the exact upwards movement of your stock. So effectively, the delta neutral strategy would have eroded any gains. It would have protected his previous gains, but it also would have covered the losses, which means he probably wasn't hedged to such an extent. CoreWeave right there up 18%. NVIDIA up 3% right there. Yeah, I know we talked about Bill Huang in the morning, but again, Bill Huang was freaking playing with Viacom and Tencent Music and Baidu. They were stocks that had volatility, but they were not stocks that went up 10x in a year. Like SanDisk is actually up 30x in the past year. At the top, it was around 42x. And Leopold got into SanDisk like a year and a half ago. He got in at like $100, $200. I mean, like, So the gains were unbelievably massive. It's just if you get levered at the top, or even if he got levered, a year ago, but he kept riding the leverage all the way to the top, and you don't end up delevering. There's that screenshot that was going viral on X that we talked about the other day. It was a guy who had $27 million, up from $1 million. So he 27x'd his money in 6 months, and now he's down at $3 million. And it was all memory. Options on memory, all the memory stocks. And so the obvious question that it begs from everybody is like, why didn't you sell at 27 million? Now, I think that's a much better question than saying, why didn't you sell the top? Because like, if I know 150 was the top on Hood in October and it was about to go down 50%, obviously I would have sold last year, right? Like, so like that question, no one ever knows what the top is. But if I was up $27 million, I would have definitely said, well, I've done pretty well. I kind of don't need to keep playing this game. And so it's like the level of greed. Now, this Leopold guy was up, 12, 15 billion, and he still stayed in the game. He still stayed levered. I mean, it's just a classic story of greed, right? That's all it is. It's greed. That's all it freaking is. You go from 250 million to 20 billion and you take no profits and you get more levered. Like you think you're an oracle and you think your stocks will never go down. It happens to the best of us. But happening to a retail investor with a couple $100,000 is different than an institutional fund that has raised, billions of dollars. It's absolutely crazy. Absolutely freaking crazy. It is the casino. That is correct. Nebius, these semi-names are still holding on, folks, which is giving me a little bit of comfort right here. We'll see what happens at 10:30. S&P still up 1%. You're not seeing a dramatic decline on these names. Does he mean he can't trade anymore? No. So legally he's allowed to do whatever he wants. But if he sold all of his public assets, I think what the implication of that is that no one wanted to give him money. Because if Jane Street or Citadel came in and wanted to give him money, then he would be able to cover his margin call. And he would have had to convince them in that meeting that we are bottoming and to give him the money because we're going to rebound massively and things are going to be okay. And if he was unable to convince them, or quite frankly, if they didn't want to be convinced because, they smelled blood in the water and they realized it was a massive opportunity for them. Quite frankly, if they created some of that blood, Jane Street and Citadel, I mean, Citadel comes out the day before the FOMC, says we're going to hike rates, everything falls. I would imagine Citadel was buying some stock because they knew that was bullshit. And that just happened at the worst time for Leopold because he had all the stocks that would get hurt if we had a rate hike or even had the potential of a rate hike. I mean, who knows if we need a documentary on this? Like, what if Citadel and Jane Street literally figured out they were going to take out this kid by getting all of his shit for cheap, paying, 50 cents on the dollar, 60 cents on the dollar, already in a 50% drawdown, but they needed to create the conditions for him to get liquidated. I don't think it's past those companies to do that. Apple down 2%, Zeta down 5%, Reddit down 1%. Seeing the software names still take a hit. Just crazy, man. Absolutely crazy. Yeah, it's like an episode of Billions. I still can't believe he got liquidated. If this is true, his entire portfolio in the public markets, that means and the 50% stake of Anthropic, which, by the way, I think he invested in Anthropic when they were worth $10 billion. This was back in 2024. It's worth $1 trillion now. If he had to sell his private market assets just to meet the demand for the liquidation, did he even make any money outside of the management fees? That's another question. Does he even come out of this with? This is just so unbelievable. AMD trying to go for 490. Could we actually see 500 on AMD? And then the other layer to the story is, what if that was the bottom? What if that legitimately was the bottom? I had a friend who ended up getting margin called pretty heavily back in April of last year during the tariffs. It was a decent chunk of cash. It was a decent chunk of cash that he lost. He used some of his crypto as collateral. That collateral ended up getting messed up in April because of the whole tariff situation. And, within 2 weeks, crypto came back, the markets came back. Trump did the whole 90-day reciprocal tariff pause, but he was liquidated. And it's one of those things where it's like, the liquidation, especially when you use perpetual futures contracts, which, their buffer for liquidation can happen pretty aggressively. I mean, it can mess up a lot of stuff right there. So maybe that was the case. Maybe that is happening. Japanese yen. Okay, so we didn't talk about that today, but we are seeing an increase. We are seeing a massive decline right there, down about 3.28%. Could this be part of the reason? Could this be part of the reason we're going a bit higher right now? Wow. 3% in a day is a lot right there. Are the Japanese yields up? Japanese 10-year, are they up or are they down? They're down, right? The yields are down. Okay, so this is basically the dollar weakening against the yen, which is technically good for stocks because that means people are putting money back into the stock market over the dollar. Dixie should be down today. It was at 101 a few weeks ago. Wow, it's at 99. Yeah, we are seeing a decline right there. Yeah, the yen is up because the dollar is down. I mean, this is kind of similar to what happened in August of 2024. As we're seeing an unwind of that yen carry trade. We know that Japan raised rates. We also know that their inflation has been ticking up. AMD 492. I mean, this is actually not horrible for the stock market if the dollar is weakening and the yen is strengthening, because what effectively that means is that people go back to borrowing against the yen at a cheaper interest rate than they would against the dollar, going back to the conversation of leverage, and then buying assets that can yield more than what they're paying on the interest for shorting, which are U.S. tech stocks. And if you're paying 2% interest and SanDisk is up 20% in a day, it's a good trade, right? SanDisk right there up 21%. Nebius, could we hit 200 today? Dude, that would be crazy. Leopold owned 5% of this company. Did he have to sell it at 140? Did he have to legit sell the bottom on Nebius, the thing he owned 5% of? And I guess the more interesting question is when Nebius went to 300, and I think his average was around 120, 140, did he not take any profits? Because again, if you took profits near the top, you don't have to nail the top, but near the top, guess what? When everything goes back down, you have money to buy the dip. You have cash. I mean, the fact that he sold nothing at the top, which I'm assuming is accurate, because why would he be begging investors for money if he had sold at the top and delevered at the top, or not even at the top, but close to the top, right around that area, and just, had a little bit more fiscal responsibility, a little bit more risk mitigation, he would have the capital to deploy again on this generational opportunity that he's trying to convince investors that is better than, or as same as early 2025. Yeah, I definitely think shorts are getting squeezed today as well. That's fair. No one sells at the top. That again, that's fair. But it's also like, it's one of those things where it's one of those things where if you're managing money, like professional money, and you buy a stock at 100 and it goes to 300, it's not about selling at 300, but it's about when you get to like 250, 275, 220, when you've made double your money in what, 5 months? I mean, Leopold 8x'd his money in about 7 months on some of these names. Like, it would be prudent to be like, okay, like, this is why CEOs sell stock, right? Because even though they're bullish on their company, this Jensen, I mean, I think last month he sold like $200 million worth of NVIDIA because, like, his NVIDIA shares are like $1 average. Like, he takes them off the top. Like, if you're managing professional money, as NVIDIA is really making a nice run right here, up almost 4%. Especially if it's on borrowed money. I mean, you take some profits there. I don't even think it sounds like, everyone says it's easy to take profits. I'm not even, like, if you're using other people's money and then you're borrowing a brokerage's money and you're up more than double in a short period of time, you put all those things together and then you don't sell, that's just greed. That's not like, oh, you missed it, or, oh, like, no one can sell the top. That's like, no, that's just greed. Like, yeah, it's hard to sell the top, but as you approach levels where it should feel uncomfortable to have that much leverage on other people's money and still pick a stock that does so well that, you should be looking at risk mitigation to some extent. It's greed. And unfortunately, all of us have to suffer the consequences of certain players that have that type of greed, because it probably wasn't Leopold. It probably was, just remember how people, again, the Grab driver in Singapore was asking me what to do with his Micron at 1100. Like, it got to that point. And so these fancy hedge fund guys probably were like, all right, it's just going to keep going. And it just didn't keep going. Meta, are we still getting hit? AMD's up 15. At least it's bounced from 525, but still at 530. Let's hear from Jefferies on their take for why Meta got hit and Microsoft went up.
Yeah, Microsoft just continued to deliver acceleration in their infrastructure business. Remember, investors were divided in negative about their apps business because of AI.
Why do these analysts not have good mics? Like, we can't hear you, bro. We can't hear you. You work at a bank that's worth hundreds of billions of dollars. We cannot hear you. Like, I don't get it. It's not that hard to invest in a $100 mic.
Are very good. And I think what we've said for a while is that Microsoft is one of the most balanced AI stories. They're not going to blow the doors off in acceleration, but they're running this for a multi-year journey. And Amy Hood, CFO, has instrumented this perfectly. So it's just consistent. The multiple has fallen from 30 to under 20 times on the multiple. So you have a multiple re-rate. You have a semi-led led world right now, and you look at the actual rebound in the business. They're doing extremely well. So yeah, I think Meta just didn't deliver on revenue. The outlook, CapEx is going higher, and no one really knows where it's going. And everyone thought they were building this big compute business, but Mark Zuckerberg really didn't give a lot of color about how they're going to approach.
That's exactly what I said. Okay, so that, my analysis and the institutional guys' analysis basically the same. When I was listening to that Meta call, there was very little color on Meta Compute, and going into the earnings, that's the only thing that I wanted to hear about. The stock probably still would have went down if Zuckerberg was like, we're going to double down on compute because they're spending more on CapEx, but there would have been more clarity on where the money is going to create diversified revenue streams from spending the $200 billion of CapEx. If you go back to prediction markets, which he actually talked about, I can't believe he mentioned prediction markets, or advertising, or the same basic stuff that people don't care about that hasn't really changed the narrative on the stock, then it was bound to fall. Whereas Microsoft did the opposite.
Approach this compute market. And remember, it took Thomas Kurian at Google years to build this. So this is going to be a longer term driver for Meta.
Brent, just looking at how the credit market has been responding to all of this, is it your expectation that the hyperscalers at some point will lose their investment grade rating, especially looking at Meta, the fact that it's now teetering at the prospect of entering negative key free cash flow?
You know, I don't know what's going to happen there. What I think we know right now is that investors aren't convinced in what Meta is building out in the future. The first wave of AI paid off in the form of better targeting and better enhancement inside their core properties. I think everyone is still questioning, are the Meta glasses going to pay off? Is Zuckerberg going to launch a full-fledged compute business, or is he just going to sell it to a few companies? What are we going to have an AI agent business for consumers that we can use their agents to do tasks like we use Microsoft, Anthropic, OpenAI to do tasks in the enterprise? So I think there's just a lot of open questions about where the money's going, when it's going to pay off. I think those questions are, there's less questions on Microsoft. And so you really had kind of a tale of two cities in terms of the execution, the performance, the underlying confidence was just so much stronger out of the Microsoft print. And then Microsoft gave you all these other key gems of like new pricing models and usage-based models. They've launched a new product called E7, which is a 60% price lift on top of their E5 modules.
Yeah, so pretty much what we talked about in the morning. Microsoft actually gave you the path to how they're going to get an ROI on AI, especially in their software business that's continuing to accelerate, whereas Meta just didn't give the outlook that they needed to. Again, I think the Meta price is still cheap. If you look at the numbers, I think it shouldn't be down 10%. Shouldn't be trading at 16 times forward earnings for the growth that they're putting up. But I don't feel a argument on valuation is relevant anymore when it comes to the hyperscalers. I think the only thing you can do when it comes to the hyperscalers is, by the way, Jose, I see you in the chat. Let me send you the link right now, Jose, so we can get you on the stream. The only thing you can do is talk about narrative and CapEx relationship to ROI, because they're all cheap outside of Tesla and Apple. They're all cheap, right? Like, so we've been saying that for so long that the names are cheap, but even Nvidia, right? But the market doesn't care anymore about them being 15 times, 16 times earnings if the market's not seeing where every dollar of CapEx is going and how that dollar translates into the opportunity that can be capitalized on for a long time. So Meta's multiple is, not even a reason to be excited about it anymore, even though, yes, it is cheap. But I think Zuck's communication, which has been bad all year, to be honest, it's been bad all year. It continues to suck. SanDisk up 23, NVIDIA 197. Can we see 200 on NVIDIA today? Can we freaking see 200 on NVIDIA today? I mean, why shouldn't it go to 200, dude? Nebius Core, they're all up 30, 20%. Like, you would imagine NVIDIA, if the semis are at least back for now, can work its way up into that $200 range. D-Wave's up 9, Microsoft still up 15. Microsoft holding on to the pump. Applied Digital, that stock also up 20% on the day. Also, the hyperscalers are not anymore that capital efficient, so they're not necessarily cheap. That's fair. That is fair. If we want to look at free cash flow yields versus just earnings growth in and of itself, then yeah, I mean, that's definitely an argument that could be. And to be fair, that's an argument that actually is part of the reason that I think the entire street was using on the hyperscalers this year. That the street was projecting their future free cash flows, and they were like, we're not going to look at EPS growth or the multiple on earnings like we've historically looked at. We're going to look at what money is leaving and what money is coming in, and the duration on when that money is going out and when that money is actually expected to come back in. And that's how we're going to judge these names. And Microsoft said the things that the street needed to hear yesterday to get them to be more excited. Bloom up 30%, folks. 30% move on Mr. Bloom as that continues to go higher. All right, let's get someone onto the show to help us make sense of what has happened over the past couple of days in the world of semis. Ladies and gentlemen, Jose, what's up, man?
What's going on, man? I was scared last night. I was like, man, chips are doing good. Amit's not responding to me anymore. He probably doesn't want me to show up on the stream anymore. So I'm happy we turned green, because now I still have a friend. I still have a friend.
I waited till we saw the bump today, dude. That's why I didn't send you the link for the past hour. I was like, only if we're green will I have Jose on. I got back from New York late last night, so I just went straight. I didn't even check.
Hey, quick. If you have a lot of people in your stream, quick thing, if I could ask. If anybody is a realtor in New Jersey and is really good, send me a message on X. I need someone. I'm looking to buy a house. Okay, let's talk about chips.
You have money for a house in the midst of this? Guys, Jose's on a different level. Jose is on a different level. But yes, if you're a realtor, but Jose, what's your email? I'll put your email there.
Jose at josenaharo.com.
Okay, I'll put that email right there in the chat. So if you're a realtor in Jersey, hit him up. All right, bro, let's get into it. I'm just gonna let you take the floor right here. Why do you think the semis fell this much over the past couple of days, and why do you think they're recovering here today?
Yeah, I mean, there's just been so many negative news piling, I think, this whole industry, and it all kind of showed up at once, right? You kind of had Chinese memory companies go IPO. You had kind of the prices of debt continue to rise for companies like Oracle. You started to get a lot of Chinese competitors in the model space come out with open source models and create fears for like OpenAI and Anthropic. And then when you create fear on OpenAI and Anthropic, it creates fear on the companies that they have obligations with. So it's just been a whole boat of news that have created this negative sentiment.
Do you think there's anything fundamental in all those stories that you pointed out that would make the market seriously question the AI trade?
I think for most people, they're asking the right questions. I think so. I think it's like, oh, if OpenAI fails, does this mean bad things for this company? So I think the questions behind it are right, especially if you're just looking at this market on a very top level basis. But I think if you become more familiar with a lot of the AI tools happening, a lot of the AI innovation, some of those questions start to seem good on the top level. But once you get deeper and deeper, it's like, yeah, maybe it's not that big of a deal. Right, it's not that big of a deal, and based on the data that we're getting, right, we had Google report earnings last week and mentioned compute constraint is still massive. Then you had kind of Microsoft yesterday mentioned the same thing. They were able to grow Azure 43%, but they still mentioned capacity constraint is an issue for them not growing faster. You had Meta saying that they could sell compute, but they actually see a better return in selling intelligence, which is kind of the whole AI story. So even though we didn't see at least too much CapEx growth for the near base, I think indications for 2027 and 2028, and I think everybody is reading it differently, and I guess that's the cool thing about data is you can read it differently. But I think 2027 and 2028, you're going to see some strong growth on CapEx on both Microsoft and Meta.
Okay, so why do you think then, if the CapEx is going up, the street is, I mean, I know you mentioned there's different interpretations of the data, but at its core, if all these companies are still spending a few $100 billion, do you think the street's looking at 2029 and just being like, there's no way in hell that like ARM is going to put up the same type of growth it's putting up in 2026? And then that's
I don't know if they're I mean, I think I don't know. I honestly don't know what the chip is happening right now, right? With this massive market turnaround. Like I don't know what the market woke up and finally was like, you know what, maybe we were too stupid before. But for example, at least for Microsoft, right? Microsoft indication of CapEx, they mentioned for this calendar year of 2026, they weren't going to increase their CapEx. It was going to stay relative with what flat. But they did mention for fiscal year of 2027, which is interesting, right? Because fiscal year of 2027 actually has 2 quarters of calendar year of 2026 and 2 quarters of 2027 of calendar year 2027. They meant for fiscal year 2027, CapEx was going to grow on a year-over-year basis.
Yeah.
So it's telling me that either they're expecting a lot more power to turn on later on throughout this in the next 6 months, opposed to post 6 months, opposed to the next 6 months, and that's where they're kind of telling us that about CapEx. But for Microsoft, they said that we're not going free cash flow negative, right? We're able to do this without going free cash flow negative in the short term. Now, I don't know how long that will last. I think that will eventually shift. But at least the street is liking on Microsoft that they're going to be able to do this without going free cash flow negative.
Do you think this is a dead cat bounce? These moves are obviously massive here. Bloom 15, AMD up 15, NVIDIA up 5, Nebius up 30. Or do you think, I mean, I don't know, do you think this Leopold guy getting liquidated and other hedge funds having to sell can mark the bottom?
The market always stretches pretty far on both ends, right? I do believe earlier in June, right? We topped about, I think June 30th, we topped. Everything was getting super excited. Everything you could, bulls were running. Now the bears are super excited. So I think now it just stretched too much on the bottom end, and we're seeing some kind of pullback. I think we're going to continue to see this volatility. Overall, I'm still very much bullish in the long term of things, right? I'm definitely not selling. Yesterday was one of my biggest purchases days of even though I've been buying during this down cycle, yesterday was one of the biggest days that I bought just because it seemed stupid. It seemed literally crazy, some of these pull downs based on what we heard from TSMC, right? TSMC, very conservative, told us that guidance. They see visibility 2028, 2029. Intel, right? Their new CEO, Lee Bhutan, right? Their new CEO. He was, for those that don't follow Intel, this was the CEO who was previously part of the board, and he was someone who hated what the prior CEO was doing, spending so much money on capex, because he didn't see a return out of it. But just in this most recent earnings, they mentioned that capex is going to grow for Intel. So for someone who has been that conservative and kind of penny picking on capex for a very long time, completely shift the nodes, is telling me that they're seeing some kind of visibility in demand that we haven't heard before. All these data points that we have heard have been completely irrational compared to a lot of these stock prices decline. So yesterday I thought was crazy, but I don't know. I mean, I'm here, so maybe this might be the top for now, but long term, I'm still very much bullish in this space.
I'm assuming yesterday the names you bought, CoreWeave's, Nebius's, kind of your favorite names.
Yeah. It was mainly in the neo cloud space.
OpenAI and Anthropic and these open source models, are you feeling uncomfortable that the open source models are reducing token costs, which could be affecting the spending commitments of OpenAI and Anthropic? Or are you thinking that that risk is just way overblown, and at the end of the day, the frontier models are still going to be really freaking good over the long term?
Yeah, I think Mark actually touched this a little bit yesterday. There was a question about this during Meta's earnings call. It's like, what do you think about these open source models? And for Meta, it would actually be really good to say, open source models are great, because then they don't have to pay tons of money to Anthropic and to all these other companies. Because now, even when they were talking about expenses, they brought up token cost. That's one of the massive growth in why their expenses continue to grow. So for them, it would be very bullish if open source models were truly at frontier level, because it would reduce their cost dramatically. But Mark even mentioned that, no, unfortunately, open source are great, but they're not at frontier levels, and they don't think they're going to be at frontier levels. So I think the fear is correct, but what we're hearing from the people inside is that frontier is still going to be needed, and it's still going to be expensive. There are going to be certain solutions that you can use these open weights, but I think for the money drivers, for the money driving AI solutions, is still going to be the frontier models that are paying these kind of margins.
I actually want to play that clip real quick, because I also didn't hear this yesterday, but this was Zucks talking about open source yesterday.
And then the leadership of your lab has also talked about going back into open source, kind of where you were a couple of years ago. So how does that fit into the strategy and all this discussion around monetization of AI products and models? Thank you very much.
Yeah, so I mean, just to get into the kind of scientific process on this a little bit, basically training large models, at each stage of training a large model, you see novel behaviors. So basically the way that you want to do this is you build up from training smaller models to building larger models. And the models that we've released so far are based on, they're a certain scale and climbing up the scaling ladder, and we're continuing to scale larger models. So I think for Muse Spark 1 and Muse Spark 1.1, I think that they are very impressive models for the scale of the model, the kind of stage of development of the lab, and I feel quite good about them. Now, we want to have models that are more advanced as well, and that's why we're scaling larger models, and that's why we're building out a bunch of the research infrastructure around that. But at the same time, we also want to have good, more efficient models that will be a lot of what we serve to consumers at scale. But if you're serving billions of people, you want the ability to have more advanced models for things that are very hard problems, and you want the ability to serve the vast majority of prompts from simpler and more efficient models. So I think both are going to be very important. The efficiency really matters, but I also think that we want to be able to solve the hardest problems for businesses. And
yeah, so kind of your point, Jose, there's a world for both. And OpenAI's revenue in Q2 or July, ARR, CNBC reported yesterday, was better than they've had the entire year, which is what it should be like if they're growing. But it is some more positive sentiment around the growth being there, and the open source model is not necessarily commoditizing what they're doing. By the way, folks, some more updates on this Leopold thing. Quote, the brokers were marketing a group of the firm's holdings, situational awareness, on both the long and short side for the sale prior to Thursday's start of trading, which is today, which means legitimately either Tuesday or Wednesday, he ended up selling. if this is correct, that his entire book was sold, which means, I mean, if Tuesday or Wednesday was the bottom, then yeah, he had to ended up selling the bottom and potentially getting liquidated right here. Jose, we got NVIDIA earnings coming up. Do you think that's going to help change sentiment as well? Or do you think the market, once again, is going to fade the earnings?
I mean, I think NVIDIA is going to crush it. But it hasn't. NVIDIA hasn't saved the market, I think, the past 2 quarters, right? It really hasn't. It's so I don't think it's going to do it again. It's going to show great numbers. It's going to show great earnings, but I think, like you mentioned, are people now wondering? People, I think, already expect 2026 to be good, and we're not even in 2027, but they expect 2027 to be good as well. The question is 2028, and it's not. These companies are not going to tell us what they expect in 2028 or 2029. Like that's
No.
it's almost irresponsible, right? Because there's certain visibility, but they can't really, and that's what the market wants. The market wants. I know 6 months from now. I probably even know a next year. So next 18 months. But can you tell me what you're going to be at 5 years from now? And no one can do that, especially with the change of AI innovation.
Jose, do you think the CapEx slows down meaningfully in 2028?
2028, I don't know. No, definitely not. Mainly because of one thing. One of the things Mark said, I actually, Mark said it yesterday. Let me just pull it up. He said that the industry has underbuilt historically for the wave of AI adoption, making existing capacity, including our own, extremely valuable. Longer term, the supply chains need to be built out to support the capacity that we anticipate we and others will need for AI-powered experiences. So he's selling, how I read this, and maybe others read it, is the supply chain market for AI data centers is going to be short compared to what we really need. In not only we, right, just what we and every other AI company need beyond. So I think that is telling me that 2028 is also going to be crazy, as long as AI innovation continues, right? Mark mentions that historically we've only had like one big innovation per year in AI, right? 2025 was the year of AI coding. 2026, the beginning of 2026, is when we saw kind of AI agents with OpenClaw. That's kind of started it all. He mentioned in the upcoming years, he expects there to be more than one creating these massive shifts in demand. But even just one is enough to drive demand like crazy. Like AI agents is really just getting started. And this is enough to, I think, drive demand beyond 2027. But if we get something else in 2028, if we get multiple stuff in 2028, I think or 2027, it's gone there on CapEx.
Which is the more optimistic view of the future that I think people want to believe in. It's just, seeing a little evidence of that would, just like the coding stuff was a lot of evidence of, like, because if you've ever vibe coded anything, first of all, I was using Fable 5 over the weekend, just unbelievable. It's the first time I've ever used it. Unfreaking believable. It understood the context of what I wanted without me having to say it, and it felt like it truly felt like it was, AGI. It felt genuinely intelligent. If we have more of those things outside of the coding use case, to your point, we're going to be constrained.
Yeah. And to me, the other thing is, like, the market only sees it, oh, we got AI agents, so that means 100% adoption is already happening. That's not what's happening. Like, there's an adoption curve that still happens with all these tools. So just because we had AI coding start in October of 2025 doesn't mean that every software team, every software engineer, every software player is using it right now. There's still an adoption curve. So there's still growth rate coming from AI coding. AI agents that are just happening, right? Tool calling. Not every app, not every software solution you're able to tool call with AI. When that adoption continues to grow, then you have even more adoption on that tool that we kind of saw 6 months ago. So that's the other thing is many people, oh, we had AI agents, we had AI coding, so no demand is coming from there. But I think it's the opposite. I think demand is growing as more people are becoming aware of these solutions.
Last question for you, Jose. His YouTube right there in the chat. And again, if you are a realtor, Jose at josenaharo.com. Because our boy needs to buy a house here. AMD earnings. What are you thinking next week for those?
Yeah, I mean, they shared already a lot of great information during their AI event that they had last week, right? They had the big customers, Anthropic announced. They had Microsoft announced as an extension. what moved the stock price is Lisa Su is very, very rare of giving us any form of clear guidance of numbers for AI or anything like that. I want her to give us a clear guidance. Lisa, if you're listening, I know you're watching the show. Someone from AMD, just tell Lisa, hey, give us some form of number. That would give us a lot of excitement. She talked about TAM expansion on CPU front, on AI accelerator fronts. We had Intel kind of telling us that the CPU shortage is continuing. Give us some guidance. Give us some damn guidance on what's happening in that space. But overall, I think it's going to go extremely well because of the numbers. Helios is coming out the second half of this year, which is going to be very bullish for them.
All right. Jose, thank you very much. I think we'll be live together for Amazon later today, right?
Yep.
So you guys will see Jose later today, and we'll cover Amazon. I guess for Amazon, just real quick. I mean, you think it's going to go like Google or Microsoft in terms of how they talk about?
I think more like Google. More like Google.
Yeah, me too. All right, Jose. Thanks so much. We will see you in the afternoon.
Take care. Bye.
All right, guys. You want to see something crazy? Do you want to see something crazy? Can you handle the truth? Can you handle the truth? Do I have a few good men watching this stream to handle the truth? Apparently, Leopold worked at FTX to start his career. This story is getting crazy. It's getting a little crazy. This is unfreaking believable. He began his career working in the private sector for the FTX Future Fund, an effective altruism philanthropic initiative created by Sam Bankman-Fried's cryptocurrency exchange, FTX. I mean, the dude's basically been trading on insider information for the past 2 years. I'm not trying to discount, like, he saw this whole AI wave before it happened, but obviously worked at OpenAI, girlfriend at Anthropic. Like, you're telling me he knows the exact Neo clouds to buy at the exact time? Like, he has all the information in the world, levers up, doesn't take any profits, almost loses everything, and he came from one of the biggest frauds in the history of financial markets, FTX, which he wasn't involved in the FTX fraud. But I mean, just the associate, it's crazy, bro. Yeah, he was probably like 21. I think he started the fund when he was 24. So that's also part of the reason that he ended up getting liquidated today, because FTX, from my understanding of the story, could have got liquidated way before they did get liquidated, which again, they got liquidated at the bottom. They got liquidated in November of 22. They had to sell $500 million of Robinhood at $10. They had to sell their Anthropic at like a $20 billion valuation. Like, so many things got liquidated literally at the bottom. But the reason they were able to avoid liquidation for so long is because they were frauding investors, and they were using the Alameda sister hedge fund as a way to swap funds without investors noticing where the money was coming from, and use customer deposits to clear up their margin calls. So, I mean, theoretically, I think Leopold was like, I'd rather just give back all the money and get liquidated versus, fraud investors. I also think he's way too public of a figure. Cryptos, FTX was like this offshore exchange and stuff, so it was easier for Bankman-Fried to navigate that stuff. SK Hynix up 13%. But everyone cares about what Leopold's doing, and his brand is so large at this point that, you can't necessarily fraud investors, especially when all your money's in public stocks. It's crazy, man. Absolutely freaking crazy. We need more information on this, bro. We need more details. Like, this is, and like, I feel bad for him too. It's like, I'm not finding this to be exciting. Like, it sucks because, this guy was contributing a lot to the broader AI enthusiasm and investor cycle. But once again, it's like, if you get greedy, you get greedy. And like, it's part of the stuff that has to get wiped out of the system every cycle. In fact, as much as I hate to say, it is the healthiest thing to happen in a bull market, to get rid of the leverage. You got to get rid of it. And once you get rid of it, there's an easier way for the market to just digest everything that's going on and move forward. And it looks like Leopold's leverage, which again, a lot of funds were copying his strategy and it was working, ended up being what needed to happen, as long as it was actually the bottom. I mean, if Nebius goes back to 140, then Imagine it goes to like 120. Maybe he sold the top. Like, I mean, as long as yesterday was legit, the extent of the structural decline from the forced deleveraging, which now we know the biggest AI hedge fund on the planet, at least in terms of returns, maybe not assets, was liquidated. If that marked the bottom, then that's it. We might have a way to go forward. It's just crazy, absolutely crazy to see the way that this is playing out. I mean, again, it is reminding me of October 2022 when you had all the crypto, Luna, that whole situation. That was around 22 as well, right? Or that was, maybe it was 23. But those were like full-on scams. This was just the guy who got a little greedy. You know, from my understanding, he wasn't scamming anybody. He just got a little too greedy at the top. Whoa. CNBC, situational awareness NAV was $45 billion. Dude, there's no way he got, well, actually, no, it makes sense. If he was 4x levered and March 30th, he had 20 billion, then that 80 billion of leverage on the 20 billion of assets, if you had 45 billion, it was probably closer to 100 billion of leverage. Yeah, it makes sense why he had to get, because if that 45 billion on July 1st turned into 20 billion on July 23rd, he sent the letter on July 24th, then boom, that was a 50% drawdown. And if you're borrowing 20 billion, you have to get liquidated at that point. You have to pay back the initial 20 billion that you borrowed. 45 billion from 250 million starting. What is the return on that? What is, so he grew it, and that's assets. That's not the leverage. That's like what the assets actually grew to. That's 180x. My goodness, dude. Didn't he hedge? He probably had some puts, but they probably weren't enough to navigate the downside there. Saint Mac, thanks for the super chat, man. Appreciate it, Amit. Your consistency and preparation are second to none. Institutional level research, thoughtful analysis, daily value, raise the bar for financial content. Much respect, happy to support. Thank you, man. Appreciate you being here. I was actually very excited to do the show today because these are the days where, you know, I'm generally pretty excited every day, but the days where there's so much to cover and so much to analyze, you know, gets me out of bed, and I'm very grateful for the people that show up every day and continue to listen and hopefully get value from the content. But these are, dude, we're living through this. We get to live through this moment in time. We get to live through it. And, you know, as a community together, we get to analyze and see how it's playing out. And it's just fascinating to look at all these different angles. And, you know, as someone who loves the art of communication, trying to break down all the different levels to this, especially because it's a story at the end of it, right? The stock market's a story. The story has been pretty ugly for the past month. It's been hurtful for the past month, painful. And so navigating why it's been so bad, because at the end of the day, it wasn't the earnings. You know, it wasn't the AI trade being fake. I mean, I'm sure there's levels of sentiment that were associated with that, but it felt like there was some big boogeyman that was out there that was causing this irrational, egregious selling. Not saying names didn't have to correct, but I mean, 50, 60% down is like, what's going on? Apparently it's Leopold. That was it. It was Leopold. Which was just crazy. It's going to suck when you get a hubby, Amit, and leave us all. You know, that's going to be inevitable, but no, I'm just dude, I think when I get married, I'm still going to do the show every day. Like, I love doing this. I mean, maybe I'm not going to be, dude, I think when I get married, I'm not going to be able to be on Twitter as much because like I'm on my phone all day. And I feel like when I get married or like get serious with someone, it's going to be hard if I'm with them to be on my phone during the whole day. I'm sure they would get annoyed by that. But when it's time to do the show, that'll be my time to do the show. Bro is blaming Leopold. I mean, it's better than blaming, you know, TSM's earnings growth of 60%. That wasn't enough. right? Like TSM is putting up amazing numbers. Why did that stock fall 15%? Well, if you have this forced deleveraging because this guy got greedy at the top and went 4x leverage on 45 billion, like that makes a hell of a lot more sense for why the TSM earnings got sold off. By the way, TSM up 7% here today. TSM topped out at what, 450? 479 this thing got to. It went to 360. We're talking about TSM. Arguably more important than NVIDIA when it comes to the AI revolution. 480 to 368 in less than a month. That is not because they missed their numbers. That absolutely is the leverage in the system that had to get taken out. It's crazy, man. Absolutely crazy. They're going to make a movie out of this. Dude, can I play Leopold? Can I be in the Wall Street movie? The problem is it's not that epic of a collapse for there to be a movie on this. That's the issue, which is also a good thing. But like, it's not like there can be a documentary on this, but there can't be a movie because like, unless the entire AI narrative completely collapses and like NVIDIA goes to like a $1 trillion company or something because of Leopold, which, you know, at the end of the day, it was 100 billion of leverage. Like it's going to hurt a lot of people. It's going to hurt the system. It's not going to collapse the system. Whereas FTX, people thought crypto was done because then we entered into a crypto bear market after the FTX thing, right? So it kind of like felt like Bitcoin was completely over with until that ended up being the bottom. You're going to play Satya? I'm going to have to play an Indian tech CEO. That's what I would have to do. Well, at least people are having a little bit friendlier of a day, right? At least we're having a little bit better of a day. If you're in the software names, you know, your day's not the best. But if you're in Nabesis, if you're in Amazon, if you're in some of the space names, I mean, Rocket Lab fell below 60 yesterday. That felt a little stupid. I did have a good short on Rocket Lab though yesterday. I shorted it at $60.15. I was just like, this thing's going below 60. This thing 1,000% is going below 60. Then it went up to 60.60. And I was like, you're not actually going back to 61. You know, you're looking at the order book flow. There was like 10,000 shares holding it up at 60. I'm like, those are going to get sold off so easily. And then it just collapsed after 10 minutes. And I got it at like $59.50, but it ends up going to 57. So it's like a lot of these names just got wrecked. But like, again, those were intraday versions of the downside momentum felt so stupid that you could actually short something down 10% on the day and know that it was probably going to break a key level and then collapse even further and even make money on it. Like the shorts have just been printing on this. Like at some point, enough became enough. And I think today we're seeing that rebound. We're like, enough is enough. This is not going to continue. I also wanted to short it because my long Rocket Lab shares were getting hit so much. I was like, you know what? I'm getting a little bit of payback here. I'm like, I will make $400 even if I'm down a lot more than that on my long Rocket Lab. But enough became enough, dude. Like it started becoming stupid. Started really becoming stupid. 140.6 prop. Thank you for the super chat. Thank you for all you do. Admit the fact that we get this level of real-time value on a day-to-day basis is incredible. You've ruined CBC for me. Appreciate you, man. Thank you for being here. Again, I think 2027 will be really exciting for the market open. I really have some big plans to upgrade the entire experience of the show. I mean, as much as I love doing it in my room right here, I think there's a much bigger way to put on the show. A lot more guests, a lot more high quality production, camera. Like we need to get the hell off StreamYard and actually have professional streaming software so that, you know, we can do this in more meaningful ways. So I have a lot of plans for 2027 and hopefully those come to fruition. But, you know, it's getting to the point, dude, where the show is legitimately growing and it's becoming a legitimate media entity. And you know, I got recognized twice yesterday walking through New York. And it's one of those things where it's like, okay, this is becoming a little bit bigger than myself. And so I want to invest and build out the infrastructure and really make it even more special. So hopefully 2027, we will get to do some more stuff on this. But at the end of the day, I just love the sport of analyzing everything that's happening right here. Meta getting a little bit of a move, 529 to 537. Very small move. but it is indeed somewhat of a move. Amid turned down Harvard for Jersey Community College. You guys really don't believe that I got waitlisted at Harvard. I don't know why you guys don't believe it. I legit got waitlisted at Harvard. And I think it was the best thing ever that I got rejected, because I feel like if I went to Harvard, I definitely wouldn't have gone down this path. I would have like become a consultant at Deloitte or something, you know, like I would have been too comfortable, too safe. But I did get waitlisted. And if I got accepted, I probably would have gone. So I'm happy I didn't, but I absolutely got waitlisted. I think we have some more updates on Leopold. Do we? Yeah, let me see if they have anything new right here.
Reversal entirely happened today, but you can see that is a recipe for pain, particularly when you are highly levered, as situational awareness, people familiar with the situation tell me was as much as 4 times. Here's a number for you, and we can come back. The as of July 1st, the net asset value for this fund, I am told by people familiar with the situation, was $45 billion. This is a fund that started the year at $3 billion. So the performance was astounding.
Wow. So 2024, they had 250 million of assets. Jan 2026, he went from 3 billion to 45. That's a 15x fold increase in assets. And I don't think a lot of that came from net new funds. It probably came from his stocks going up. That is crazy, bro. And he probably used a ton of leverage when he had 3 billion to get to that 45 billion, but he got liquidated for the entire thing as he has sold his entire book of public investments.
45 billion NAV at its height at the beginning of July. You lever that, you can see why it would have a significant impact throughout the market. What we've been reporting this morning, of course, is as a result of hitting margin requirements and a lot of other, and the leverage as well, and the significant losses that have been taken, the entire public book at the firm has been sold, has been moved. I don't know the buyer. I have a couple of names. People are obviously trying to figure out. And by the way, whoever bought it is doing very well, because so many of these stocks have now reversed their recent performance with semis up and some of the software names down. But they've taken it off, and they are going to focus on the private investments, I'm told, at situational awareness. There has been various information I've been hearing involving a stake in Anthropic. I'm just not certain as to whether that actually a spokesman for situational awareness says no, they have not sold that. I have somebody else who I'm close to who tells me absolutely they were talking for quite some time about a significant stake. They do believe it is traded away, but it's unclear to me whether that's the case. But this is a story that we're going to be talking about for a little bit, because it's the rapid ascent in value, the leverage being taken, and then what was the real impact on so many of the stocks that we talk about SEMA so often.
24 years old, a former OpenAI executive, didn't have prior investing experience, but yet gained sort of a fan club, would you say, on Wall Street?
Huge notoriety as a result of what was incredible performance. And obviously, a very intelligent fellow as well, as we pointed out, valedictorian here at Columbia, graduated at 19. That said, having covered this industry for as long as I have, I mean, one thing you learn is, things can turn fast when you are levered. And in this case, it appears that was what happened.
How much this could signal broader stress from other hedge funds that have heavy positions in tech remains to be seen.
Yeah, there are a number of names I've heard as well. And again, it's very hard to understand the full size of these things because they've changed so much and they've been up so much that may be under similar pressure, given they have portfolios that are not dissimilar from what Mr. Aschenbrenner was doing.
Meantime, guys, still an inside day. Haven't really taken out.
This is crazy, man. This is crazy. 24 years old, managing 45 billion, gets liquidated for the entire thing. Now, it does seem like they're going to become a VC fund and manage private assets. It's just, when you take that big of a loss, I wonder how investors think of you, and I wonder if they want to give you money even to invest in the private markets. Because look, taking a loss like this is not because he picked the wrong stocks. It's because of his greed. And so that says something more about character, unfortunately, more than investment picking skills or stock picking skills, right? So now if you're an LP and you want to give him money, you're going to ask yourself, like, does this guy have the risk mitigation to protect that capital? Granted, when you invest in the VC space, you don't have to sell, right? Because VCs usually ride stuff out for 10, 20 years. But still, there's an argument around the control of that capital and how someone would navigate it. Yeah, the crazy thing is he's only 24. I mean, he could have his redemption arc in the public markets and still be super young. I mean, most people who manage money professionally are in their 40s and 50s. You know, maybe they start in their late 30s, but like if you're managing real money, it takes some time. But the problem is you also need like this happened with Bill Ackman in 2015. Like we've had like the Wall Street superstars that Cathie Wood in 2021, they get over levered and they have a moment in time. In this case, AI was the moment in time, which hopefully is more real than the other moments in time, but it creates the framework and the catalyst for people to emerge and manage a ton of professional money by seeing the trend early. It's just having the ability to leave the casino is something that's very hard to do. And so I don't know if we're going to get another AI technological build out revolution. Who knows, dude, for the next like century? Like when are we going to get something as big as this when it comes to all this investment capital, all these opportunities to invest in the growth of civilization via AI? Like, you know, you had the internet, big deal. And now you have AI. You have the railroads back in the day. Cloud computing was important, but that was still, you know, built on the internet. And now it's AI. The 10-year's at 4.67. So 10-year's still up a little bit here. He did outperform Buffett for a year. That is fair. Google launches Gemini Robotics 2. Google introduces 3 models aimed at providing a shared intelligence layer across different robot platforms. That's good news, but once again, I think the robotics story is still a bit far away. I'm hoping it's quicker than what we think, because that'll create a lot of demand for some of these AI names as well. Doug says it means he wasn't mature or experienced enough to exercise judgment, discretion, and prudence. That's fair, but it's also like, I don't know if his age is the only reason, because there's a lot of fund managers that are in their 40s and 50s that also probably didn't have the discretion to figure out that they need to sell, right? There's plenty of stories we've heard of fund managers that get liquidated that are older. And then if a bunch of fund managers were following this kid, I wonder if those guys actually took profits when he didn't. So definitely age and experience plays a role. But I also wonder if this was just a bigger story around greed and thinking that that the AI Kool-Aid was legitimately never going to reset. And it was less about him having the experience and more about him just thinking he's the smartest guy in the world. But I guess to an extent comes from experience, because once you get humbled like this, you know, everyone hopefully takes those lessons and learns. SpaceX still up a little bit. Kospi should do well tonight if this is the sentiment we're seeing on the AI names. The problem with super young fund managers is they legitimately think this time is different when it comes to valuations and leverage. Yeah, that's fair. That is very fair. A lot of it ultimately takes time to navigate the nuances of why this time might not be different. And again, the AI build out, I do think is fundamentally different from a lot of other build outs, but valuation wise, like again, Bloom at 330, Sandus at 2300, Rocket Lab at 150, like those valuations did get kind of like stupid in June. I don't even think it's saying it in hindsight. I think even at the time, all of us were like, yeah, this is kind of crazy, but like, okay. And it was one of those things where you either took action there or you just let it draw down. I guess the more of these cycles you go through, you learn from this stuff. You can't play him. He's taller than you. He is a lot taller than me. He's like almost 6 feet, I think. Dude, if I was 6 feet, life would be so different. If I was even 5'10", bro, don't even give me 6 feet. Give me 5'9". That would honestly give me 5'8". It's 5'8" on a good day. It's 5'8" on Yeah, that's why I like the winter, because it's cold. I can wear boots and actually be taller. Here's what the Starbucks CEO had to say on their earnings. That stock's up 3%.
Kind of by blocking and tackling. I know you're a sports fan.
Yeah, that's exactly right. I think our consistency is really finally scaling across the entire Starbucks business. And that consistency really is, the partner connection, the way that our partners craft these drinks for our customers, and then the experience that our customers are feeling and experiencing when they come into our stores. We really are, I think, reclaiming the third place, both physically in how we're doing these uplifts and remodels, and then also just the experience of being in that Starbucks community again. And it's clear that customers are coming back to the great menu, innovation, and when they get that experience.
It's up 30% this year. Do have people put in the chat, do you drink Starbucks every day? Like, are you a loyal Starbucks consumer? Have the prices kind of relaxed for you, or is it still something that you're not fond of? Because again, the sentiment on Starbucks a year ago was just like everything's too expensive and the coffee sucks. And now it's like the subscription program's growing, prices have calmed down a bit, and it looks like consumer loyalty is back to where it was potentially in 2023.
They say they want to be back in the Starbucks place.
Now, you also talked about the way the comp was made up, and I think it would surprise a lot of people. This was not rising price of coffee. It was done, as you and I both know, the correct way.
Yeah, we're really happy about the way the growth is showing up. It's in transactions, and then we're also getting a nice pickup in the mix where people are using more modifiers like our cold foam, or adding an extra shot of espresso, or moving into our food. And so you're seeing higher attaches of our food, both in the morning and in the afternoon. And we love to see the balanced growth. It didn't rely on pricing or, some one-off. This really was an execution around operational discipline, getting a consistent experience, and then really our marketing team doing a great job on getting the brand and culture and having the right menu innovation at the right time.
I mean, if he's saying it wasn't about pricing and it was customer adoption on different products, and NVIDIA getting some red candles right there, 193.90, that's actually kind of healthy for the consumer. If people are willing to actually pay the same prices at a company like Starbucks. I mean, again, anecdotally, there's a lot of stories about the consumer struggling, but whether it's inflation data, unemployment data, labor market data, earnings data in the most important consumer companies, airlines, cruise lines, Starbucks, like the consumer is not stopping the spend. Unless everyone's doing buy now, pay later on their espressos. Like, the spend is coming in, and these companies are capitalizing on it. And maybe the internal efficiencies are helping their margins when it comes to AI, but it doesn't feel like the consumer is that horrible in the context of earnings. Okay, what else do we have today? The big story again was obviously this Leopold thing. UBS, they expect global memory chip undersupply to continue into 2028. That's some good headlines to get the memory names to get some love. Google with Gemini Robotics. You have your semi names that are continuing to make a move. FOMC, the quick summary of FOMC, we didn't talk about it too much, but Kevin Warsh didn't say anything. In fact, we gotta use this phrase now based on what he said yesterday. The Fed paused yesterday, right? The Fed did not cut, the Fed did not hike, the Fed paused. Warsh was explicitly asked if they paused, and he was like, no, we didn't pause. We rigorously reviewed the situation. And the S&P turned green right at the moment. Now the S&P turned red 20 minutes after. But I was, I was like, interesting. A rigorous review of the situation is the way. So that sentence right there, that phrase goes to show how much he didn't answer anything, which is why I think the market was pissed off because they didn't get guidance. But also part of the reason maybe that we're getting some recovery because he didn't signal a hike or a cut. And maybe that uncertainty is better than the certainty of a hike.
A little bit. What specifically in your mind would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead.
I mean, bro, he's saying nothing, bro. He's saying nothing. Like, trust me, I know how to say nothing sometimes. Okay, as someone who's spent a lot of time in communication, I know there's some group presentations in college where you're just getting up, you're answering the teacher, like you and that's when I realized, oh, I can kind of talk without saying anything sometimes. Hopefully that's not how you guys feel on the Market Open. Hopefully we have a lot more value here. But, you know, there are some moments where you're like, you put a bunch of words together, you combine them, you articulate them in a certain way, and people are left thinking, wow, yeah, that's a good answer. In reality, you didn't say shit. And I think for an hour, Kevin Warsh said absolutely nothing. And the market was just left with, okay, I guess he's just not going to tell us anything. But we rigorously reviewed what's happening. It's like, what? Yeah, you're the Fed. Your job is to review what's happening. And you decided that inflation wasn't bad enough to pause or to hike, which is why every question was like, you keep saying inflation's bad, but you're not doing anything about it. And I think what Kevin Warsh is really trying to do is buy some time for Trump to end this damn Iran war so that oil can come down so that he can convince the other Fed members to not hike, even if we don't cut. And so he's coming up with his word salad. But that's essentially what we heard for an hour yesterday.
If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause. They reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think,
which is a pause. It's like, so you guys paused rates like as long as pause since 2008. You didn't do anything. That is a pause.
That's the beginning of the story, not the end of the story.
That's the beginning of the story, not the end of the story. What does that? We didn't do anything different, but that's the beginning of our story, not the end of our story. Like, it sounds like he's like a soccer, like a fifth grade soccer coach. It's like, guys, we lost the game, but this is the beginning of our story, not the end of our story. Like, what is he saying, bro? And I think that's why we sold off after hours, because the market was like, what did we just listen to? Like, at least Jay Powell gives us some type of substance. This guy's not giving us anything. Which, to be honest, I think Kevin Warsh is going to continue not giving anything until they actually make a decision on a hike or a cut, and the market's going to have to get used to it. But that's, you know, part of the reason why I think we got hit hard after hours as well. So this is a good comment. So this is actually a great take. I actually read some analysis from someone last night that I thought their analysis made a lot of sense right here. So, you know, we've talked about this in the past to get a little bit more deeper and nuanced of what's happening with the Fed. Kevin Warsh is a hawk. He's always been a hawk. So I think part of the reason he's trying not to hike is because he's a hawk from a balance sheet perspective, not from an interest rate perspective. When Warsh implies that he is going to let the market do his tightening for him, he doesn't mean that he's going to talk bonds up, which bonds would eventually see through because, you know, the credit market's not stupid. He means he's going to make real yields go up by letting the balance sheet run off, QT, and moving duration onto private balance sheets where they will expect a higher yield in return, aka data center debt. That's where all the money is going to. Like, why would you, like, think about it logically. Why would you buy a 10-year yield from the US government at 4.7% when you can buy Oracle's debt? Maybe Oracle's a bad example because they're a little bit more unsafe, but Meta's debt at 7%. Like, you'd rather buy Meta, right? The pushback would be, well, Meta's unsafe compared to the US government. It's like, yeah, but it's Meta, right? So it's like, yes, obviously the US government is safer than Meta, but for another 300 basis points of yield, if you could shift all of that money into private balance sheets like Meta and help, you know, the cost of capital go down for US Treasury yields, that actually runs down the balance sheet. It also effectively contracts the money supply, which is a form of QT. The QE era made a fool of economists, but 2020 gave them some redemption. The craziest part of all of this is that this time he might be right. There is too much money in the US. There's too much wealth effect. Stocks only go up because there's nothing else to buy with it at all. I agree with that. I mean, obviously, I think there's more fundamental reasons for stocks to go up, but like logically, we're in a secular bull market. There's a lot of liquidity in the system. That's part of the reason why the stock market has done so well over the past 10 years. So maybe Warsh is correct that the solution isn't higher short-term rates, but a smaller balance sheet and tighter financial conditions. This could also mean lower stocks and less wealth effect, because now there's something long duration to buy with a return that competes with them, which is, potentially what we're seeing with the 10-year as it continues to spike up into that 4.7% range. So if you're trying to say, okay, what's the TLDR of that? The TLDR is that he doesn't want to hike because he thinks effectively the market and what's happening with AI data center spend in the credit markets with all these hyperscalers leveraging up on debt, which is why Warsh mentioned AI. He said CapEx was important. I'll try to get that clip as well, but I was surprised when he mentioned CapEx. His plan is to kind of let natural forms of quantitative tightening happening by having the balance sheet sell off and have less money overall in the system, which, yes, a hike theoretically could also get money out of the system, but obviously it's going to really hurt Americans if you hike rates in this environment. And so I think part of his story is I'm not going to give you guys guidance because I think the market will figure it out. And based on this AI data center build out, which if you don't think he's had discussions with Stanley Druckenmiller about this thesis, I think absolutely that's part of what's going on right here. Is Druckenmiller saying, dude, look at the hyperscalers, look at what they're doing with their debt. There's a way to effectively get money out of the system without you having to hike rates, which again, if he hikes rates, that would, really mess up a lot of the interest that the long-term hyperscalers are paying on their debt in and of itself, because the cost of capital would go up. So the conclusion is he's not going to hike. He doesn't want to hike. He thinks the market's going to figure it out. And he's trying to say that in a way that doesn't freak out the market without explicitly saying it. But if you read between the lines, it feels like that's what he's saying. And this is similar to what he said yesterday when he was talking about CapEx.
The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict.
AKA AI will lead to deflation. That's basically what he's saying right there, which is, the whole press conference could be summed up as CapEx is going great. They keep spending. AI will be deflationary. I don't need to artificially raise rates just to get money out of the system. It's going to happen by itself. Now, maybe he's going to be wrong about that. There's a chance he could very well be wrong about that. But I think that's what he was trying to say without explicitly saying it. And, the market, because of the uncertainty of trying to navigate what he actually meant, took a hit. And that's why stocks went down yesterday. SanDisk up 21, GE Veranova up 7. We are seeing some red candles. AMD 498 to 482, but again, those red candles are going to come with the territory if we're going to have 15% moves on most of these stocks. Corning's up 7, Lemonade's up 4. Lemonade got hit pretty bad yesterday. TeraWulf up 17, Enphase up 1, ASML up 7. When ASML got halted on Monday, ASML, this is not some random meme stock. ASML got halted. That's when I knew it was getting kind of stupid. Why is a $700 billion company getting halted? That type of selling is not because people stopped believing in lithography technology. It had to be some level of deleveraging, right? CoreWeave right there, that is also up 22% on the day. I love Warsh because he's an AI bull. Look, I like that he's an AI bull as well, but the problem is those other Fed members aren't necessarily, again, 25% of the Fed voted for a hike. It was a 9-3 vote. So I really think, when Warsh goes to sleep at night, he is going to sleep with the hope that he wakes up in the morning and Trump ends this war, because if oil continues to be elevated the way it is, I don't think he could just be like, AI is going to cause deflation, because that's a multi-year process. That's not going to happen overnight. And the problem is the Fed has to make a decision in the next couple of weeks again on raising rates. And imagine if oil accelerates. Imagine we get back to 100 because we have a ground invasion or something. Like that is the one thing I think where he's like, all right, I really don't want to do it. But at the end of the day, I'm one person. I have to convince 11 other people. 11 of those other people that probably aren't a fan of Trump, it's not like the Fed is completely apolitical. And that's the other headwind that we have to navigate. Hood continuing to take a hit as that's going to. Oh, by the way, we didn't even mention this about Meta. We didn't even mention this about Meta. Let me do these super chats real quick, and then we'll talk about this Meta thing. Jay's thinking of the super chat. Google said in 24 months they can fill half of their backlog. Microsoft said in 12 months they can fill around 35%. After 1 to 2 years, they still have a lot of capacity to build the backlog, and the backlog still growing. Yes, I agree with that. That's actually very bullish, particularly because Microsoft yesterday specifically said OpenAI is not part of the 25% increase in the backlog that they generated, which is also why I think the stock's up 50%. Because remember, last time their backlog went up 50%, but a lot of it was OpenAI, and so the market kind of faded it. So, and then yeah, Google converting, you know, 250 billion of revenue on the 500 billion of RPO definitely could be beneficial. Ariello, thank you for the super chat. Amit, I have watched your YouTube channel more than any other media in my entire life. That is how much your show has grown, and I'm 63. I appreciate that, Ariello. Thank you. Let me know if I'm saying your name wrong, but thank you for being here. I know you've been part of the chat for a long time. And yeah, appreciate you. I appreciate everyone who watches every day. It's one of the greatest joys of life to be able to wake up every morning and actually do what I love. So it means the world that people enjoy it as well. Now, in terms of Meta, what I was going to say is that they spent $2.4 billion on legal fees. Never mind. I can't talk about Meta because we just got another headline. We will talk about Meta in a second. Oh my goodness. Citadel bought the portfolio. This is a movie. This is a movie. So Citadel says the Fed's going to hike rates when they know damn well the Fed wasn't going to hike rates. They scare the shit out of the markets. Look at this. My voice is breaking. I can't even say this. Leopold, this 24-year-old kid, gets liquidated on $45 billion, and they buy his whole book of public stocks on probably 40 to 50 cents on the dollar. This is a movie. And it's crazy that a lot of us kind of felt that Citadel was doing some scummy stuff, but I didn't know Leopold was going to be the sacrifice in this. Like, I mean, I think a lot of people called BS on the Citadel report that they were trying to scare retail. They didn't give a shit about retail. They wanted to scare Leopold. And they just wanted to make sure there was enough fear that Leopold couldn't do anything to buy the they probably, dude, Citadel has access to so much data. They probably saw his leverage. They probably saw his cost basis. They probably saw his net liquidation ratios. And they were like, this is a pretty easy game. Let's just get shit down 10, 15%. He's done. We're going to get his Bloom at 150. This is crazy. We're going to get his Nebius at 140. Oh my goodness, dude. Do we have any reporting on this? Is crazy. This is the Wall Street Journal, by the way. It's not CNBC. Wall Street Journal saying Citadel. We thought it might have been Citadel or freaking Jane Street, right? Guys, this is absolutely crazy. Wait, I have a subscription to the Wall Street Journal. Let me pull up the article. Let's see. Okay, here it is. All right, let's read this. This is unfreaking believable. This is crazy. Situational Awareness sold the bulk of its stock portfolio to Ken Griffin's investment firm, Citadel, after suffering deep losses, according to people familiar with the matter. That's it. That's the article. Okay, so we don't have any other cover. This literally broke just now, so they probably are going to be updating this, but that's it. Wow. That's it, folks. Greatest show on earth. Greatest freaking show on earth. Duns, thanks for the super chat. With this new headline, would that change anything in Jason's opinion of the falling knife that keeps falling? Are we catching the knife? Yeah, I think it changes a lot, because if the falling knife was due to a deleveraging event and the kid who got levered up officially delevered by selling to the most ruthless man on Wall Street, Ken Griffin, then yeah, I think maybe it's not a falling knife anymore. Now, again, I hesitate to say that because who knows? There's probably more nuance to it, but like, does Nebius have to go back to 140 if it only went there because of a deleveraging event, which means it's not technically a falling knife anymore? They got him, bro. They got him. As Rango says right there, they got him. They got this guy. Dude, they played. All right, we got to write the tweet. Let's write the tweet in real time, folks. This is absolutely freaking crazy, man. Citadel, out of all people, Citadel came in. Wall Street Journal. Citadel has bought Situational Awareness's stock portfolio. This is incredible. How do you spell awareness? This is what happens when I tweet. This is my life, guys. I don't know how to spell awareness. This is crazy, bro. And I spelled Citadel wrong. What am I doing? Citadel has bought Situational Awareness's entire stock portfolio. Okay, there's too much pressure to do this tweet in front of you guys. I'm not doing it. That's why I'm spelling shit wrong. There's too much pressure. I'll wait till later. I'll be late on the tweet. I don't care. I have too many emotions to write this tweet anyway. I need to calm down to write this tweet. Spelling Citadel. What am I doing? This is crazy, bro. I just can't believe this. You guys make me nervous. Isn't that cute? You guys make me nervous. It's like me blushing. This is crazy, bro. This is for performance anxiety. Dude, writing a tweet. Dude, seriously, writing a tweet. There's layers on how to write a tweet in a way that can be consumed by many, many people, and make sure that the tweet is structured in the right way. So I don't want to be under pressure to type it quickly. I also want to see if we get more details and analyze this. This is crazy, man. Other people tweeted already. That's okay. That's okay. A high-flying AI-focused hedge fund sold the bulk of its stock portfolio to Ken Griffin's investment firm after suffering deep losses, according to people familiar with the matter. Channel that energy to the movie script. Oh my gosh. Bro, it's just, this is like, word of the day is awareness. Yeah. I mean, if you're up 45 billy, maybe you have some awareness to sell the damn thing, or at least de-lever a little. Even one of my friends who's super bulled up on Micron, 7 figures in Micron options, when it was at 1,000, 1,100, he was taking profits. Even though, he thinks Micron should be like a $2,000 stock, but he bought it at 300. He was like, dude, I'm up 5x on the calls. Like, what more could I ask for? Like, I'm going to take some off the table. And that was with $1 million. Like, this guy was playing with 45 billion. Ken also stole his wife. Oh my gosh, dude. I don't know how I would be able to go up to my wife and tell her I lost 45 billion, bro. Like, that's a little, like, honey, made a little boo-boo. A little teeny weeny mistake. I know you work at Anthropic and tell me everything that's going on, but I still ended up losing it all. This is crazy, dude. Note to self, sell when I'm up 100. Note to self, when I'm up 100x, sell. Amit, do you agree this is not legal? So it doesn't feel legal, but it absolutely is legal. Like, at the end of the day, Citadel is simply a market participant. Just like Roaring Kitty is a market participant. So when Roaring Kitty does a live stream and convinces people to buy GameStop, it's very similar to Bill Ackman going on CNBC or Citadel putting out a research report that they think the Fed's going to have a surprise hike. It's all the same shit. You really can't get prosecuted for it. It's happened, for the past 100 years. It's just the way it happened and the blood in the streets that Ken Griffin. Honestly, you got to give props to Ken Griffin, dude. Sometimes you got to give props to the villain, right? Sometimes you got to give props to the villain. Ken Griffin's what, 57? Ken Griffin's looking at that 24-year-old like, this guy has no idea how to navigate this. This guy has no idea what's about to happen. Ken Griffin has access to basically everyone's position in America because Citadel market makes I mean, it handles what, like 1 out of every 3 transactions every day in the stock market. They see everything. They probably saw this a month before it was happening. And as soon as they confirmed that we were getting a little bit of a drawdown, which is probably like the first week of July after Micron topped, they probably were like, all right, who do we get out of here? And then the nail in the coffin was this FOMC, which Citadel was probably, you know, shorting the shit out of to exacerbate the selling, but also created so much fear around the rate hike. Micron's still up 15% right there. I mean, this is crazy, guys. Straight villain shit. Straight villain. Yeah, it looks like they're going to continue as a private investment. Dude, he kicked him out of the public markets. Ken Griffin kicked Leopold out of the public markets. He said, get the F out of here, kid. You don't know what you're doing? 4x leverage on 45 billion? Ha. Enjoy it while it lasts. And then he takes his assets for 50 cents on the dollar. I mean, if Nebius really is a $300 stock and he got it at 140, which I think is Leopold's average, around that range. Or even if Nebius is a $250 stock and he got it at, or even if Nebius is a $180 stock and he got 5% of the company at 140. Like, if Nebius is a $145 stock, that's still a massive move from the pennies on the dollar that Citadel is picking it up on. Wall Street Journal, Millennium Management had also bid on the stock portfolio. Situational Awareness had a $5 billion Anthropic holding. So if they sold half of it, they sold $2.5 billion. Financial Times. Goldman Sachs was also involved in the Situational Awareness book sale. So Wall Street Journal is reporting that Citadel ended up buying it. Millennium had a bid on it, which means Citadel might have outbid them. And then Goldman maybe, I mean, at that point, all the big guys got together and said, all right, we're taking this kid out. It is kind of similar to the long-term capital management story, which we don't have time to talk about that, but we'll talk about that on another day for those that don't know. That hedge fund literally caused like a Great Depression. Like they got levered like 200 to 1 because in the 1980s, there weren't that many regulations around leverage. This is not as extreme, but still it's like, it's aggressive. We've got some coverage right here. Let me pull this up on Situational Awareness.
As we've been following, of course, all morning. May even have more in a moment, but let me just share with you what we can confirm, which is that the bulk of the public equities portfolio at Situational Awareness, the giant hedge fund that had net asset value of some $45 billion led by that man at the beginning of July, has been sold to the hedge fund of Citadel. Not perhaps a surprise, as I've been reporting throughout the morning. There was a sale to what you'd have to imagine was a very large hedge fund. Now can confirm that is, in fact, Citadel. Now, I am being told that there are some unlevered positions that remain at the hedge fund of Situational Awareness, public equities. There is also a portfolio of private investments that includes a fairly large stake in Anthropic, and still a lot of uncertainty around the fate of that. The company was scrambling throughout yesterday into the night to meet obligations, and so at one point was considering trying to raise liquidity through sales of some of its private investments, and then turned to selling much of its public investments. And that is where they went. But it's not still completely clear that they also did not at least sell some of the privates, though that remains unclear. But Citadel, we can confirm now, guys, is the, in fact, buyer of that. Want to try and get a little more detail in terms of numbers and where things stand for a firm that, again, had incredible performance and had a very large impact on many of the stocks that we've been reporting on, that you report on as well, in the chip sector, for example, SEMA, over some period of time now, and is continuing to have that impact as a result of the dissolution of so many of those positions.
Many of the names that they hold were big winners at one point, but then experienced through a short period of time some level of distress. I mean, you look at the performance of tech stocks, software, chips, memory in the month of July. I mean, the semiconductor ETF down about 25%.
Yeah, and when you're levered 4 times, that can hurt a lot. Again, this firm, I'm told, began the year at around $3 billion in assets under management, hit a high, as I said, a net NAV of $45 billion as of July 1st, and you know what the month has been like since then. And so huge reversals, huge losses, had to cover them, and has done so. The bulk of its public equities, as we've been reporting, but now we can tell you as well, has gone to Citadel.
The motivation behind Citadel buying this book, your thoughts?
Well, first of all, they're up right now on it. I mean, they have ample liquidity to be able to actually, this has changed so much, of course. I knew a number of people who were negotiating for various parts of the portfolio through some of their prime brokers. But if you can get it all done in one fell swoop with a firm like that there are only a handful that have that kind of ability to actually step up, and Citadel is one of them. And of course, they're going to benefit already as a result of the moves we've seen in the stocks. Some of the software stocks that were short are now down, and some of the longs, obviously, that were hurting are now up.
They literally bought the book, and the shorts in the book go down today because the semis, the longs go up. They get the semis cheap. They get the software names cheap because the software names were up yesterday. I mean, this is just crazy. Financial Times right here, talks with multiple investors shifted to a single large buyer to speed up the process and minimize losses. A large portion of the $16 billion of public equity, which makes sense because he was 3x levered, down from $45 billion, was sold to Citadel.
Where this leaves Ashton Brenner, who's only 24 years old, left OpenAI to start this fund, got major backers, experiencing all this in a short period of time.
He apparently still has a decent amount of assets under management, given the value of his private investments and what may be at least some stump of the equities that were not levered. And apparently he's getting married this weekend, so he's got that going for him too.
What an eventful week.
Yeah.
There's no fucking way he just said that. This story cannot get crazier. You lost $40 billion in a week and you're getting married on Saturday. Honey, McDonald's is not a horrible place to honeymoon. If we don't all right, Bora Bora, do we have to go to Bora Bora? Like, really? Turks and Caicos? Hash browns at McDonald's are not that bad. This is crazy. This is actually crazy. This is unbelievable. He probably wanted to sell everything so he could enjoy the freaking wedding, bro. Like, imagine getting margin called as you say, I do. No, you don't. You better get your ass back to that office and start unloading a position here. I mean, this makes more sense. He wanted to enjoy his freaking wedding. I would sell off my book as well before I get married. I would want to enjoy my honeymoon without getting margin called. That would be nice. Yeah, best day of his life, dude. Worst weekend of my life. Oh my goodness. You can't cancel the wedding. There's no way you can cancel the amount of planning that goes into a wedding. I'd rather sell my $40 billion of equities than cancel my wedding. I don't need Nebius going to 120 when I'm dancing at my reception. They're going to be playing All of Me by John Legend. He's going to be crying. His wife's going to, think that he's madly in love with her because he's freaking crying while he's dancing. That motherfucker is crying because Nebius is getting liquidated as we speak. That's why he's crying. Not because he loves you. He just lost $40 billion. So instead, he says, you know what, Ken Griffin? Get rid of it. It's over. Let me go get married. Live my life in peace. I mean, the guy's still filthy rich. He's going to be fine. But damn, bro. Damn. That's just like... Brittany says at that point, you just have to reschedule the wedding. Maybe at that point, you got to reschedule, dude. Maybe at that point, you got to reschedule. I thought I was marrying a billionaire. Actually, I'm marrying a millionaire. I mean, this is kind of crazy, bro. Love is priceless. That is right. Love is priceless. I mean, she better really... She better never divorce. He gave up $45 billion for you. I know I'm making a joke out of it, but I genuinely believe that like the guy has a wedding coming up. I don't think he wants to negotiate with a bunch of brokers on like, you know, continuing to allow him to play in the public markets and resolve his margin call. I think the guy's like, all right, screw it. Like, take it, whatever. Like, because he would need billions of dollars to get him to just break even, to stay solvent. And then imagine we didn't get this pump today on Nebius and SanDisk. Like, imagine Nebius was down 5% today. I mean, those billions of dollars would have evaporated again. So at some point, you have to throw in the towel and be like, okay, take it. And then if you got a wedding coming up, it's one of those things where it's like, all right, like, I mean, like if I'm not going to reschedule the wedding, I don't want to think about this when I'm getting married. This is just, I mean, I don't think I've ever, we've had some crazy days on the stream. We've had some crazy days covering the news. I think this is the craziest. I think this is top 5. I think it's top 5, or it's top 2. What has been a crazier story we've had to cover? I mean, maybe Palantir earnings hitting 100. That's the only thing I can, like, Robinhood getting to the S&P. Like, the tariff drama, but, like, all of that stuff was, like, a lot of that stuff was rooted in the macro. This is, like, a liquidation event of one of the smartest people, supposedly, in the greatest, you know, tech trade we've ever had, which is AI. And every layer to the story now with this Citadel part of it, in terms of them scaring the market. And I mean, like, legit, there's no way they say there's a chance of a surprise rate hike for what? If they aren't thinking there's a really big opportunity to tank everything like egregiously, which is what we saw yesterday after hours, and then buy shit super cheap. It's a story as old as time. I mean, this is, so he saved us. Yeah, honestly, Ken Griffin saved us. Well, Ken Griffin caused the problem to begin with, but you know, by him taking Leopold out and Leopold agreeing to go get married instead of worry about a margin call, he might have saved the market. Having said that, Leopold put him in this situation by getting over levered. I don't want to say it's all Ken Griffin's fault. I mean, Ken Griffin did what an experienced vet in the market would do. Leopold just gave him the alley and he ooped it by being in the right situation of getting over levered and not having a safety. And as a result, Ken and Citadel came in and that was it. That's how it played out. Absolutely crazy, guys. Absolutely freaking crazy. All right, that is it for me for today. I will be back on the market close. We'll have a lot to talk about in the market close. We will have Amazon. We will have Apple. Thank you all for being here and putting up with my animated storytelling. This is why we do this, right? This is the stuff that's like, we're here. We're living in the moment. We're analyzing it. And it's just some of the, and I'm sure for the next, 10, 15, 20 years, we will have a lot of stories every day to cover as Wall Street continues to be the greatest show on earth. The greatest freaking show on earth. Okay, if he actually married Ken Griffin's daughter, I wouldn't know what to. If I know you're joking, Chef Mike, but if he actually was marrying his father, if that was his father-in-law, which to be honest would make it feel a little better. It's like, at least I'm losing $40 billion to my father-in-law. Like, if I get a good relationship with him, maybe he'll give some of it back to me. I mean, that'd be freaking crazy, dude. Freaking crazy. All right, I'm out. Thank you, everybody. We're not doing a word of the day. Because this, word of the day is awareness. This story in and of itself is the day. There is no word of the day. This story is the day. Absolute freaking cinema. And just crazy. Eleni here, thank you for the super chat. What do you think about Amazon earnings today? I think they will be more like Google, which means I'm a little bit more skeptical about the stock price, but I think they're going to increase CapEx, which is still good for the semis. Hopefully the market doesn't punish them too much, but we will have a lot to talk about with Amazon and Apple after the bell. We also have Reddit, MicroStrategy. We got a bunch of different companies. So yeah, we'll be back after the close and we'll see how this ends up turning out. That's it. That's it for me. Thank you all for being here. I will see you guys on the market close. Amazon, Apple, I think we'll have a full house. We'll see what we've got going on. And Citadel, awareness. That's the word of the day. All right. Thank you, everybody. I'll see you guys on the market close. Appreciate you all. See you all in a few hours. Bye, everybody.